Looking good on my end. Everything should be coming through loud and clear. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. It is Wednesday, 8 p.m. Eastern Standard Time on 12/29/2021. And we're about to get started with some technical analysis. Oh yeah. And as we speak, Bitcoin trying to have a little bit of bounce off the bottom of the range, but not looking good for the old cryptos. We've been talking about this point. We've been waiting, watching, and it's not what we want to see. Not what we want to see. So let's go ahead and bring it back to the old school, and we'll start with our TNX, and then we'll work our way over towards the dollar crypto. We'll do some traditional assets. Want to jump back into the tech space because we skipped that one last time. Maybe we'll see how we do for time. So somebody let me know everything is coming through loud and clear, but everything looks good. So first we have the TNX 10-year note. So this is the rate on the treasuries, and obviously had a nice little pop higher today. Jumped straight up to 1.544. So these were looking a little bit sketchy. Obviously rolling over the slope right here, potentially putting the daily bull market in danger. But now we are well above that level. Still not threatening our cycle high, nor are we threatening the recent high, but still looking pretty good right now. Basically just flagging out though. Nothing has changed as far as I'm concerned. We still have some potential patterns playing out right here, but in all reality, we have a high, we have a low, we have a lower high, we have a higher low. So essentially what we're looking at is basically a flag pattern playing out after a nice little leg to the upside. It's a bullish pattern overall, but in all reality, this is a bearish downtrend. We're in the middle of a bullish retracement of that downtrend. We just need to see how this plays out. But typically what happens is this bullish retracement will play out, and then we'll see continuation to the downside. Now, in this case, though, we may see something different because continuation to the downside basically takes us, potentially back to zero, negative. Not really possible in this case. So we will have to see how this plays out. But obviously starting to pick back up some momentum. We're seeing green histograms. We're threatening the slope in the zero line back on top of the 200 exponential and simple. So overall, still looks pretty good. I mean, I would not be surprised to see pullbacks in these things. This is exactly what we've been talking about, though. This is our weekly chart here, and we banged our head on the 200 exponential. We banged our head on the 200 exponential again, and we're putting in higher lows after each of those touches. So if we come up here and bang our head again, it's that drywall example. It's just a matter of time before we bust through it. First time you hit it, you crack it a little bit. Second time, start to poke through the other end. Third time, it starts to crumble and you bust through. And then our next target to the upside will be that 1.7, roughly 7.7, 7.8, 7.9, somewhere around there, depending. Obviously, it's going to keep moving to the downside. But as of now, it does look like a rejection off of the slope line, the TJD, TDMACD. And, we come back up here, anything could happen. But it looks like this just wants to continue consolidating, potentially even get a pullback. But again, when we switch over to our monthly chart, that's when this really reveals ourselves. We came out of the bearish control zone with the hard buy signal. We crossed the 8 and 21 back to the upside. We're still well below the 200 exponential and simple, so we are still very much in a bearish trend. But this does look like a bottoming pattern. We have a bunch of great green histograms in a row. We're back on top of the slope line. We're back on top of the zero line. So all we have to do is literally just maintain sideways momentum, and we're going to flip this slope line over blue. And every time we flip the slope line over blue in the past, we see long trending moves, either sideways or to the upside. So I would not be surprised to see this up here in the 2.5 range sometime in the next couple of months. But, at this point in time, patience is a virtue. We know obviously a bunch of stuff going on with the Fed. Obviously the taper of asset purchases. potential taper of the balance sheet, although I doubt it. I don't think they'll actually ever taper anything off the balance sheet, but obviously have some rate hikes in the works as well, potentially 2 or 3 next year, assuming these markets don't just roll over. I suspect, though, the pressure will kind of come down as some of these inflation fears come down, as typically we slow down around like January, beginning of the year, first couple months. So I think if we have a couple, decent prints on some of these inflation numbers and whatnot, it will alleviate a little bit of the political pressure. But again, going into the midterms and everything, people get mad about inflation. People don't like things costing more money. So what's going on, brother? I'm assuming you can hear me loud and clear. Good to see you. So if we just jump into TLT next, we'll see we did lose the 200 exponential moving average on the daily. Again, these are just chopping around. We're not seeing a bunch of difference here. What we're paying attention for is, basically the short and long end of the yield curve and the potential inversion. So here we see the VIX next. Obviously, the VIX broke down from the neutral area. Looks like it's headed back down to the bottom of the range. Much like we were paying attention to this little break out of the descending channel here for a potential move to the upside into like our area of interest, we'd be looking for the same thing on the downside, but still in the neutral zone. Looks like we're headed down here to the bottom. The area that I'm most paying attention to, is essentially just a retest of, these levels down here. Somewhere around here, that's when it gets interesting. If we come down here, we start tapping our, about that 15 level. That's when it's going to look, potentially interesting for either a bottoming or a breakdown. But in all reality, we still have this channel. We still have the larger channel in effect. And we're basically just in the middle of everything. So yeah, we'll just run through the indexes real quick here. So oil, again, headed up to the upside. I know everybody's calling for oil to dump and the pullback and everything. We basically tagged our target. Obviously made it up to the red box, touched the resistance within, a couple pennies right here. So at this point in time, well inside the bullish control zone, bunch of green histograms above the slope line, above the 0 line, 821 crossback to the upside, and we're finding clear support on the 200 exponential and simple. So while I do think that we're in danger here of topping out, we could easily come back up here much higher, like mid 80s. The main area we're looking for is, do we take out this high right here, this cycle high? Or do we see this triple bearish divergence on the weekly play out and continuation to the downside? Regardless, what we're looking for is, does this put in a lower or a higher high? Puts in a higher high, we likely see continuation up to our next fib and keep moving up to the upside. If we see a lower high, we will probably get a violent move to the downside and see that bearish divergence on the weekly playing out. So, but we're definitely in the danger areas where I think we're likely to top. Dow Jones, threatening the all-time highs, got a little wick up here. Again, still very strong, very, very strong. Coming towards the end of the month here, end of the year, etc. Again, we're just paying attention to these levels as we do have one drive, higher high on price action, a third higher high on price action, and potentially coming up here to put in a fourth higher high on price action. Each of those highs corresponds with 1, 2, 3, and now potentially a fourth drive of bearish divergence. So, depending what this histogram does, we could easily keep moving to the upside, put in a new all-time high, divergence invalidated. This could easily be a part of that move and divergence invalidated. But, we're basically continuing to just melt to the upside with lower and lower volume and lower momentum. And what we do know is, regardless of what happens, that, that's unsustainable. But for right now, hey, stick with the trend, go with the flow. Don't make life hard on yourself, in my opinion. So we have obviously 1, 2, 3, and now potentially pushing up here for a fourth peak corresponding with these as well. So, if we just closed right now, it would be a fourth drive of bearish divergence, if this started to roll back over. But who knows? Keeps creeping up here, invalidates the bearish divergence, rips to the outside. We hit our 50K target. I mean, we got targets all the way up. First one, the 1.5 at 37,644, 1.618, almost 40,000. And then we've got the big boy targets up here, 50K basically. I mean, that's what a melt up looks like. So, no surprise here. We've been melting up. We broke out of long-term resistance. So, But we're definitely getting tired here. I mean, on the monthly, we're at extremely high levels, finding some support right here, consolidating. Looks like we're going to try to get one more pushback up here. I mean, that's a pretty juicy, thick and juicy green candle. Very strong. But, you would expect that. Lots of other markets are weak, so everybody's running to the strong ones. And we know that the strongest markets basically in the world are, Dow Jones and the S&P. Obviously, the American stock market in general is strong, but not so much the tech stocks. But a couple of the tech stocks are even keeping like those indexes at all-time highs. So S&P looking great here. So we're officially at 477 or like 47, 70. So, I mean, we're all but at my target. I said 4,800. We fell just shy of it so far. And we made it to like what? 47.88. So, or in this case, 478.80. So we'll see what happens. I mean, I won't be mad if we miss it by a couple of dollars, but we're definitely on our way. And again, if we switch over to the weekly here, we can see once again, same thing is happening. We're putting in lower highs on the indicator oscillator and higher highs on price action. We are at basically, top resistance, like ridiculous levels. So can this keep going, longer than people expect? It definitely can. But, when this thing turns, we don't want to be in front of it. So, but the truth is, I mean, there's going to be consistent flows into, treasury bonds and the main indexes constantly. Just automated buying every single month. Retirement plans, 401ks, all that good juicy stuff. Constant flow of money into these things. And then the more weakness we see, internationally, around the world, etc., I mean, the more juicy the American investments or vehicles look. So IXIC, NASDAQ, not quite as strong as the Dow and the S&P. But obviously, I mean, it looks fan-freaking-tastic. If you look at the individual tech stocks, and then I told you that, we're basically at all-time highs within a couple dollars on the NASDAQ, I don't think you would believe me. But obviously, because of the weighting and the strength in just a couple of the big names, this thing is hanging on. It's holding on. And we're right at that W pattern we were talking about on all these charts. So basically, if we just consolidate here long enough, we would likely get the measure move from the bottom of the W up to the top. Still have to be careful. We don't want to see this topping out here and then coming back down to retest like the neckline, as that would potentially look like a head and shoulders. But as long as we're basically holding this green support and the 200 moving averages, there's no reason to believe this is going to break down as long as those things are happening. So then we have the Russell next. Obviously just been range bound forever. Failed breakout to the upside. Still finding support at those same levels. Here we are once again consolidating in the middle of the range. I'm still neutral on this. Been neutral on this forever. Would never ever in a million years invest in the Russell. Straight up trash. It's like buying, a horse with 3 legs in a horse race with a bunch of like big juicy stallions. Why do you want to pick the loser? Why not just pick the winners? Well, it's cheap. It's been going sideways. It's consolidating. It's a good deal. Well, maybe it's not a good deal. Maybe it's just fairly valued because it's trash and it's full of trash. I wouldn't want to be in this, when the shit hits the fan. I'll tell you that much. This is where all the zombies live. Right here. Right in this range. That's where all the zombies are. They're corralled inside this range. And eventually they're going to run out of food and they're going to fall out the bottom. And they're coming for you. So, Russell, consolidating in the middle of the range, in the middle of the 200 exponential and simple moving averages. 200 simple has already rolled over. 200 exponential had a couple scares. We're at the heartline of the channel. 8 and 21 looking to roll back over to the upside. A bunch of green histograms creeping back up to the upside. Target to the upside, still top of the range, 2,345. Target to the downside, still 2,129. Till one of those breaks. It's going nowhere. It's been going nowhere, and it will continue to go nowhere. So XLE next. Energy looking strong, obviously corresponding with oil. looks okay. Got a nice little bounce off 200 exponential and simple. Definitely seeing a little weakness as the 200 simple has crept up on top of the 200 exponential. Looking across the 821 back to the upside, it looks okay. I mean, I don't love energy. Energy has been a massive underperformer literally for decades. So it finally, like, I mean, I think people forget this. There's a reason no one was in energy for so long. Energy has been trash, dead money since 2014. Since 2014, when it put in its all-time high, it's just been getting absolutely thrashed. So what is happening right now in energy? I mean, it's basically just having, you know, a bullish retracement of the bearish dump. So like when people look at energy, they say it's strong. When I look at energy, I say, oh, it looks like a piece of trash that's just having a bullish retracement of its trashiness. I mean, it dropped 77% from the all-time high over, you know, what, 2,100 days? So like, you know, 6 years, 7 years almost. Doesn't look good to me. Still doesn't look good. I mean, it's showing some strength now. It's fighting the 200 exponential. Next target to the upside, 64, 61, 200 simple, on the monthly, in the bullish control zone, blue slope line. I mean, it looks good, but you know, again, what, 15% move to the upside, and then there's just so much overhead resistance. There's literally decades worth of price action that this thing has to chew through. I mean, going back to, you know, 2006, we have 15 years worth of price action we have to get through. And then if we get through that 16 years of price action, you know, it's an 81% move to all-time highs. So sure, I mean, that's good. 81% is good for sure. But 16 years worth of resistance. I mean, there's a lot of sellers probably in this area right here. So it's going to be a long stride, a nice choppy, long, just grinding move through that range. But does it put in new all-time highs? Sure, probably eventually. I mean, I think the probability of anything goes to, you know, 100% over a long enough time frame, or zero, depending on how you look at it. So XLI, industrial sector, again, trying to look strong here, but let's just keep in mind this thing's been range bound since May of 2021. So we're just operating inside of this channel in between two blue fib levels, bouncing off 200 exponential and simple. 200 simple is above the 200 exponential. So while it looks okay, it's definitely losing momentum. I mean, the 200 exponential crossed above the 200 simple, you know, basically after we bottomed out back in September of last year. So for, you know, basically the better part of a year, it was gaining momentum to the upside. Now it's losing momentum to the upside. Still looks okay. Consolidating at the top of the range, you know, at all-time highs. Could go either way. I mean, sure, it could definitely rip to the upside right here, or it could just be a giant Wyckoff distribution pattern. But, I mean, the way I look at it, going back to 2009, we've been operating inside this channel for a long time. Came down, touched the top of the channel a bunch of times, touched the heartline a bunch of times. We can tell this is very valid. You know, it's definitely very much driven by bots and algos, traders, you know, ascending support and resistance very clearly acting in this channel. You know, we can see clear interactions on the heartline, and then the CVD dump took us down exactly to the bottom of the range, and also the 200 exponential moving average. A perfect reason why it's important to use the 200 exponential and 200 simple. If you're looking to buy the 200 simple, you missed this perfect buying opportunity. If you were looking to buy the 200 exponential, you nailed it. But obviously, other people looking at the same thing we're looking at. And, you know, while this still looks strong, we are getting a hard sell signal on the monthly. You know, I mean, let's just look at this for an example. You know, I'm not saying this has to happen, but, you know, this was our last hard sell signal, or you know, our first relevant hard sell signal on the monthly. After we got that, we dropped 60-something% over, you know, a year plus. The next hard sell signal we got on the monthly and left the bullish control zone was here, and that corresponded with a 30% drop. The next one we saw after that, hard sell signal, left the bullish control zone. That one corresponded with a 18% dump. The next time we left the bullish control zone, got a hard sell signal. And again, I'm not trying to be like too repetitive, but I'm just trying to make a point that there's a reason that I use these specific metrics. And while they don't always just play out like the next day, they do play out, the majority of the times. In this case, 100% of the time. This was a 25% dump, or if you go to the bottom here, 40% dump. We did get obviously another signal, at that same time right here. So that was slightly higher, but again, 40% dump. And now here we see that same signal printing again. The Stochs are crossing the downside on the monthly. We're seeing some clear weakness here. We're basically at the top of the range. I would not be surprised to see this chop around for a couple more months, push slightly higher, and then get like rejected or be some sort of throw over or Wyckoff distribution pattern, followed by, historically speaking, what could we expect? We could expect, an 18 to, 60% dump. So where's that going to take us to? 10% is just down to the heart line to retest that. If we start breaking out of this mini channel inside the big channel, then, maybe we start getting the measure move. We start looking at key fib levels. Then we're looking at 20, 25%. Then we're looking at 30%. Retest of the 200 exponential or simple. We're looking at like 50%. Does it have to happen? No. But probability tells us we're more than likely going to be getting a 20 to, 60% dump in the near future, with this signal printing. So that's the industrial sector. So what's that going to look like? What would cause that? What's the economy going to look like if we see that taking place? What would cause an event like that to take place? A recession, a depression, negative GDP numbers. I don't know. A trade war or hot war with China or Russia. I can't tell you what the news is going to say. I can give you a pretty good idea, but I can tell you what the charts are saying. And, I'm like the translator. Sometimes people get mad at me. They want to shoot the messenger. I'm just the guy who's reading you, what the note says. I'm reading you what the chart says. I don't make this stuff up. I'm not like, Bitcoin sucks. I hate it. It's garbage. But that's my opinion. I'm not like, oh, I hate America and the industrial sector's garbage and it's going to go to zero. No, I'm translating it. You don't speak this language, or maybe you're in the middle of learning this language. I'm going through, I'm checking your errors. We're reading it together. We're translating. We're just looking at what the market's telling us. It's not my opinion. I'm not giving you my feelings. I'm not hoping that the price goes up or down. I don't get mad if it goes the opposite way that I wanted it to, or I said it was going to go. I'm just looking at what it's telling us. So XLB next, material sector, obviously would be in many ways related to the industrial sector. We would expect probably some kind of similar moves, in manufacturing or, whatnot. Again, we see hard sell signal, coming out of the bullish control zone. We see a hard sell signal coming out of the bullish control zone, hard sell signal coming out of the bullish control zone, hard sell signal. You could literally just switch these charts and no one would know the difference. So again, we're seeing that hard sell signal. Now, we're technically still up here at like that 85 level, and we don't technically leave the bullish control zone and leave this red highlighted area until we drop below 80. But the cross has already happened. So that's our warning signal. So there's two factors we pay attention to: the cross and then the X of the bullish control zone. The cross is like, hey, yellow light and there's a semi truck coming, and the light's yellow. And then when we exit the bullish control zone, it's like, and we're about to get T-boned, or we just got T-boned. So, sometimes it happens right away. Sometimes there's a little delay, but, we see the semi truck coming. The light's turning yellow. The semi's not hitting the brakes. Our job is to avoid getting T-boned. So again, sometimes it happens exactly at the same time. Sometimes there's a slight delay. Sometimes a little less delay. But the important factor is that both those things, happen. So, and again, same thing. We can go through and measure these all over again, but I promise you it's just going to say the same thing. And here we see again a bunch of red weakness. We see one green histogram here. Not uncommon to see one last like push up, one new high, something like that. Looks good. We're almost to that measure move, almost to our target up here. But, again, danger zone. We talked about this basically triangle pattern, the breakout of the triangle pattern, the retest of the highs, and then the measure move, up to the target. So is it unrealistic to think we get the completion of the measure move and we hit our target up here at 93, 96, basically 94? I don't think that's unrealistic. I think there's a high probability you know, that we get a couple more percentage points to the upside, get a nice little push up here, you know, and then people get absolutely trapped as we, you know, basically break out and then go into a long bear market consolidation, you know, dump, whatever, capitulation. But who knows? Again, just translating the data. XLF, financial sector. We're seeing one of those similar like W patterns right here, trying to bottom out, starting to build up a little bit of momentum, a little bit off the highs. Didn't quite get to our 1.618 target, fell short right at the 1.5, somewhere right in between. But, you know, that's why we put the boxes in play, is we don't need to touch the exact fib level, but we know for a fact that the bots and algos like to touch the exact fib levels. So it would not be unrealistic for me to think we're going to consolidate here, burst back up to 1.618, and then that's potentially our top. But we do see 200 simple on top of 200 exponential again. We see this getting a little bit tired. We see the bots showing up to participate in the stream. Always nice to see you guys. God, if I had as many real people that were excited about the streams as I did bots, I mean, I'd have 1 million followers at this point in time. Freaking ridiculous. So monthly, again, we're seeing the same thing. Still well inside the bullish control zone. Starting to see the stochastics rolling over. Seeing some weakness, you know, on the histogram here. I mean, looks okay. Still looks okay, but starting to look a little tired. So financial sector, I mean, but all-time highs. So, you know, blue sky breakout essentially within a couple dollars. XLY, consumer discretionary. Again, breaking out of a, you know, descending broadening wedge. Looks like we're going to come back up here and retest the previous high, that 213 resistance mark. Building up a little bit of momentum. Looks like it wants to head up here. But as we switch over to the monthly, and the reason I'm looking at the longer time frames is obviously we're getting ready to end out the year, getting ready to end out, you know, the month itself, the quarter, however you, whatever aspect you want to look at it. But, you know, if I'm not the only one who's looking at these end of year, end of month things and saying, okay, what's a little elevated? What's high? What did we do well on that we're ready to, you know, kind of pull out of a little bit and let this play out a little bit? I mean, this is what normal people do, investors, whatever. And also, we'll see a lot of people the same way we see a lot of smart money, institutional money, etc. You know, harvesting losses towards the end of the year, either at like end of November, beginning of December, or the very end of December for like those last minute, you know, tax write-offs. We see the same thing happening, you know, at the beginning of the new year, knowing that we can take profits in a lot of the gainers that we have, close positions, take profits, de-risk, and then we don't have to worry about paying taxes immediately. We have some time to work that out. We have some time to offset those gains. We have time to, you know, reevaluate. We can free up a little bit of excess cash and then, you know, deploy that accordingly. So, you know, you don't have to do what smart money does, but there's a reason it's called smart money. So here's an important example of what I was talking about why it's so important that we wait until it actually exits the bullish control zone, because sometimes we will get these false signals right here. So we want to wait until, you know, and here we get a hard sell, but a long time still inside the bullish control zone. Here we get it right away. Here we get it, you know, the next month. But again, we see that each time we exit that bullish control zone, each time we get that hard sell signal, we do see, you know, a decent dump. Obviously, this is a little bit less volatile in comparison, but I mean, still 21% drawdown is no joke. I mean, this is obviously a big boy, but, you know, 37%. So, you know, what does it look like in all reality? Maybe we push up here, maybe we put in a new all-time high. We just come back and back test, you know, the breakout level, 16% move. Maybe we come down, touch a 21 on the monthly. I mean, it's enough to get out of the way for, in my opinion. XLP, consumer discretionary, you know, at all-time highs, closing at all-time highs. Again, just looks nice and juicy. Busted through that resistance. This is one of the ones I think will stay strongest for the longest, in my opinion. Just because, you know, I'm sorry, I think I said consumer discretionary, but I meant consumer staples. Because this is like stuff that people need regardless. Even as things slow, even as inflation comes in, people start watching their money, people start cutting back on this or that or the other. We don't tend to see that in consumer staples in the same way. So, but again, on the monthly, hard sell, exit the bullish control zone, hard sell, exit the bullish control zone, hard sell, still inside the bullish control zone. So we got to be careful. But again, that's a nice big juicy green candle. Definitely seeing a little more strength in some of these as opposed to others. And hopefully by looking at them next to each other, we can kind of compare that and see why this one looks a little bit stronger and, why I say this is more of a safety play. And then, we can see that I'm not the only one thinking that way because we can see the strength. We were talking about basically, coming into, October, November, December, basically talking about how we expected the weak underperformers to get absolutely destroyed in the markets, indexes and individual stocks. And then the ones that had done well to just go absolutely parabolic into the end of the year as people consolidated into strength or, like go with the flow or, whatever, cut their losers and, let the winners ride. And that's exactly what we've seen. The tech sector is a perfect example of it. Most of our like tech and highly speculative, like we don't actually make any money, but we have a good like white paper or marketing team, stocks. Like, a lot of them look like shit. They're down 30%, 50%, 75%. And then if you look at, the sector as a whole, the index is a couple percent off its highs because of Apple, because of Microsoft, because of Tesla, Nvidia, and a couple of them even now are down a decent amount. Not a decent amount, but I think Tesla's down, 15% still off its high. They're down enough. XLV healthcare again very strong, headed up to our target here. Broke out again through key levels, that previous high, and then the all-time high. In the process of putting in our measure move, almost there at this point in time, 143. Again, another one that I expect to stay strong. Not only just because it's more of like a safety play and, a necessity regardless of conditions, but, just with everything going on, with the, as George Gammon says, the scariance and the big V and everything, I would expect healthcare to stay strong. And, people always talk about pent up demand. I think there's quite a bit of pent up demand, for people that basically like put off important procedures or, seeking medical attention during the last like little 2-year period. Looks very strong. But again, we see a hard sell signal still very much inside the bullish control zone. But we could easily get a situation like this where we just continue to the upside. So that's why we're paying attention. In the same way that we never leave the bullish control zone through here. So we're not in the same danger until we finally do. And then it's like, a big capitulation gets bought up, etc. We take this signal a lot less seriously too. Because here we get a hard sell signal, but we never make it inside the bullish control zone. So that's why I like to have the option to turn on and off like the hard signals, like, on these indicators where you can only have like the strict criteria, hard buys and sells come on. So like you won't get a hard buy signal on your chart when this crosses or a hard sell signal when this crosses or this hard buy, because in order to get the hard buy signal, it has to be below the 20. Or in order to get the hard sell signal, it has to be above the 80. So you'll only get buy signals, when you're down here in the bearish control zone. You'll only get sell signals when you're in the bullish control zone, and then you get that cross. So, obviously in something like the stock market, it's much more useful to only have the hard sell signals on with strict criteria, but to always have the buy signals on. Because, in something that's constantly going to the upside, how many opportunities are you ever going to get? In this XLV healthcare sector, we have a chart that goes back to 1999, and we see at no point in time ever, with the exception of the 2008, financial crisis, during the GFC, we have obviously one time where it goes into the bearish control zone for 1 month, and then we have one more time for 1 month, and we never get inside the bearish control zone a hard buy signal, like signal. So that would never work. It would be useless on the monthly time frame. Now on the daily or weekly, we would obviously get more signals than on the monthly, but still not very many. So, depending on what you're looking at, how you're evaluating it. That's why sometimes it's nice to have only your strict criteria on, or to have the strict criteria for buys in a parabolic market to the upside. Or I'm sorry, regular criteria for buys, but strict criteria for sells. So, but again, probably this is, I think, probably the strongest that we've looked at so far. Oops, sorry, I want to turn that back. All right. So keeping on moving through here. XLU, again, strong, retesting the highs right here, breaking out past that yellow level of resistance. Very much still looking for this trade setup to play out. We're basically at the final completion initial target from back then, but I do expect us to creep up to the heart line, like 74, potentially the top of the channel, and that final target up here in like the 80s. But again, let's just kind of zoom out here and get our big picture. Important again to notice here, while we are basically close to closing our highest monthly ever, and basically a blue sky breakout, we're still very much operating inside of a very clear and definable range going back to 2008. So we've been operating inside this range for 13 years with clear resistance and support on the heart line. So when we get to that heart line, we would expect clear resistance, and then eventually if we get above it, we're going to start looking at the top of the channel and paying attention to depending how long it takes us to get there, how long we consolidate for. We could be looking at targets up here like 86 or so dollars. Again, this to me is a safety play. Looks much better. This consolidated for quite some time here. Doesn't have that same bullish control zone weakness, like rolling over type look. So what does that tell us? Well, it was basically consolidating, taking its time, not overexhausting itself while everything else ran. And then when we see some of those like safety plays and pullbacks from some of these other things, I think more likely than not, we'll see, flight to safety into something like utilities, something like, potentially healthcare, potentially treasuries. But even treasuries right now, is that even a safety play? If you told me right now, I need to deploy capital and I have to put it somewhere where I think it's going to be the safest, maybe not make the most money, but definitely not lose the most money, and you said you want to buy utilities or you want to buy United States treasuries, short, medium, long duration, I would take utilities, honestly. But I mean, I'm looking to protect my capital, protect my principal, not take losses. I mean, it's easy to make gains. It's hard to protect them. And that's why it's so much more important. And we talk about one of the like charts I have shared in like the tools in the group is, the percentage that you need to get back after a loss. And I think a lot of times people think, well, I lost 20%. So if I just make 20%, I'm back to even. But that's not the case. It's an easy example is if you have $100 worth of value in something and then it goes down by 25%. Now you have $75 in value. So if that $75 goes up now by that same 25%, you only have 75% of, or 25, you only have 25% more of that 75%, not the initial 100. So now you take 75, you divide that, by, or multiply it by 0.25, 1.25, whatever. And, you don't get back to 100. You're not there. You're still down. And, another easier example is to take $100 and say you get cut in half. You lose 50%. So now your $100 is worth 50. So in order for your 50 to get back to break even, you go up 50%. You're only back at 75. So you went down 50, you went up 50, but you're still down 25%. So if you lose 50% of your stack, you're at $50 now. So in order to get back to where you started, back to that 100, you have to make 100% in gains. So it's so much more important to protect yourself from losses, especially big losses, than it is to make gains. Because if I told you, hey, you're going to lose 50% if you stay in that stock, and then I told you, hey, you're going to gain 100% if you stay in that stock, you'd be like, oh, cool, I'll just stay in it then. But really, you just end up in the same spot, and just one sounds better than the other. But if it's the other way around, it's the same thing. If you have, say you take the loss, in this case, we take the loss first and then the gain. What if it's the other way around? What if you have, $50 and then your $50 goes up 100% and now you have $100? So you're like, oh, I doubled up. I'm up 100%. But now if you just lose 50% of the 100 you made, you're right back where you started. So the losses are always exponentially modified in comparison to your gains, which is why it will and is and always will be, in my opinion, so much more important to protect your principal, protect your capital. And that's why, like, for me, conservative investing, conservative stop losses, it's easy to make big gains. It's easy to make small gains. It's easy to take small losses. But if we literally can just avoid big losses, small wins, small losses cancel each other out, avoid big losses, and all that's left is big gains. And that's just so much more crucial in my opinion. So XLK, so tech sector, we see all-time highs, and obviously if I showed you this chart and then I showed you a bunch of like, the big names and the popular stocks and the Cathie Wood stocks and all that stuff, you'd be like, oh, no way it's at all-time highs. They're getting absolutely wrecked. And then you look at some of these, like the NASDAQ or XLK, and you're like, how can this be? How can they be a couple % off all-time highs? Doesn't make sense. Well, again, it's the weighting and just a couple big names. It's giving a deceptive, picture of the broader index. And I'm telling you right now, I promise you this looks so much like our 2000.com bubble burst. Everybody looks at this point in time where they're like, oh, 2000, stock market crashed, Amazon lost 95% of its value, internet stocks crashed, but now they're at all-time highs again, so it's okay. But this is what it looked like. It was literally rolling corrections. It was just things getting wrecked one after another. And then all of a sudden, everything exploded to the upside eventually over time. But it was just one thing getting wrecked after another. And it was like, it's like dodging bullets, and eventually you get shot. And you're like, well, I dodged most of the bullets. And you're like, yeah, but you still got shot in the head. Like, it doesn't work. You can't just dodge most of the bullets. You still end up dead. But XLK, again, putting in a new high right here, obviously invalidated the, potential head and shoulders we were talking about. That's good. But, what is this? Essentially, some sort of like ascending, broadening wedge type situation here. Some kind of, potential divergence building. As we have, basically a peak right here, a slightly lower peak, or you just count that as one peak. And then we have a lower peak right here. Now, we could easily continue to the upside here, take out this peak, threaten this peak, new all-time highs, invalidate the divergence. But we're definitely seeing potential for like bearish divergence in like an ascending broadening wedge. So even if we come back down, threaten the heart line, threaten the bottom of the range, this is essentially potential Wyckoff distribution again taking place. So got to be real careful with some of these things. Tech's longer term chart doesn't look bad like some of the other ones do. Shows still a lot of strength, as there was like long-term consolidations in the NASDAQ and a lot of these things. A lot of them are off their all-time highs. So we don't see like that same weakness where the stochastics are rolling over. So in my opinion, this actually looks better than most of these other, sectors do. XLC, communication, probably the weakest that we've seen here. We did come back up to our target. We did reclaim the 200 exponential, still below the 200 simple, and they're starting to flatten out. This is not good. Typically, this is what we see, and this is why I always pay attention to the 200 exponential and simple. When we see the 200 exponential cross above the 200 simple, that's showing strength in these markets. When we see the 200 simple crossing above the 200 exponential because it lags, that's showing us there's weakness in this trend. So while it could still put in a new all-time high, it's still strong. The trend is still to the upside. The slope of the 200 exponential and simple in this case are both to the upside technically, although we did threaten the 200 exponential. We did flip over red shortly for like a short little period right here. We're seeing clear weakness taking place. And typically when we see that weakness taking place, it corresponds with, a potential or eventually a dump. Here's a good example. We can look at XLC right here. Obviously we broke down from it right here. This was a little weaker because we didn't see that parabolic move to the upside, but we see once the 200 exponential was under the 200 simple, obviously the weakness had already taken place. But, this just tells us, even if we don't have a massive dump right here, around this area is when it's like, okay, let's start de-risking. let's not take a chance because we're seeing weakness. I would much rather get back in when this momentum picks back up, assuming we get back above this yellow resistance, assuming that, we start flipping the 200 exponential back up, it crosses back above the 200 simple. I mean, when do we get back in? Like, $81 buying into strength, continuation to the upside. I'd much rather do that. But we'll see what happens. We're at a resistance right now in the form of the 200 simple. We're at a resistance in this descending red trend line. We're at a resistance in our previous support level in yellow here. So communication looks weak, but it is starting to build up a little bit of momentum on the TJD TDMACD. It is in the bullish control zone. It is trying to reclaim. It crossed 821 back to the upside, save the trend on the 200 exponential. So there's definitely still some potential that this reclaims this area and continues to the upside. And by all means, I'll be the first one to be bullish on it again once it proves itself. XLRE still very strong, all-time highs, back inside the bullish control zone, just absolutely crushing it. And maybe we'll see some pressure once the rate hikes come in and whatnot. But as of now, first trade setup is completed. The second one, the 1.5, still in the works, but that's putting us up at like 54 or 57. And then the 1.618 is 57.97. And I mean, let's remember, these have been in play since, like mid-July. So, this thing's not exactly like going parabolic to the upside, but, it was very clearly displaying what was taking place. Now, we do see here, once again, though, the 200 simple is crossing above the 200 exponential. So if we stay strong here, 200 exponential bounce back up, it'll stay strong, it'll look strong, it'll pull away from the 200 simple. But, if we just consolidate for too long or start pulling back down, this will probably be okay, honestly, because they're basically crossing back to the upside or saving the cross. This looks pretty strong, honestly. It really does. I mean, in comparison to what we've been looking at least. XTN, transportation, I mean, it looks okay for now. We reclaim that key level. We're putting in a W bottoming pattern off the 200 exponential and simple. We likely get, if we see continuation here, we likely get the measure move, which would basically just be from the bottom of the W to the heart line of the W, which is basically just going to take us back to the highs, possibly like all-time highs, basically a retest of the highs. So overall, looks pretty good. Looks strong. Momentum in its favor. Picking back up above the zero line. Still red slope, but trying to pick up here. If we look at our longer terms, yeah, I mean, looks pretty good. Definitely have to be careful, with the time cycle analysis, as we know that, January, February, March typically are, the times when this tops out. We've only seen since, going back to 2011, we've only seen, this situation play out 3 times. Sell, buy, sell, exit the bullish control zone, capitulation, dump. Sell, exit the bullish control zone, capitulation, dump. Sell, but never actually inside the bullish control zone. So we don't count that one. We invalidate that one, obviously, which would have been the perfect worst time to sell, obviously. And then once again, sell, potentially exiting the bullish control zone. I mean, Stoch is angled to the downside. We're just barely off of it. So 83. So while we look at this and we say, oh, all-time highs, blue sky breakout, looks strong, we can see here that the jewel thief is telling us a little something different. And, it's telling us basically the same thing it told us right here, which was, a year and 35% drawdown. So do we want to dodge a year and 0 drawdown? Sure. Do we want to dodge 35% drawdown? Definitely. Do we want to dodge a year and 35% drawdown? Even more so. We see the next time that happened, what happened? Basically, we had a drawdown of 48%. And this one lasted, depending where you go from, the initial, top right here or the double top. But we have basically 545 days. If we go from back here, it's closer to 700 days. So 1.5 to 2 years and 50% downside. Do I want to dodge that? I 100% do. I 100% do. I have no interest in just sitting sideways and stuff, getting wrecked through either time or price capitulation. So seeing this hard sell signal right here, could we have a situation where we continue to the upside and we trade inside the bullish control zone even after the hard sell signal for, a few months afterwards before we top out? We definitely could. Could we have an exact situation like this where we come down, consolidate, double top, come down? Sure. Do we have a situation like this where we just all of a sudden capitulate? Definitely. Any one of those possibility. But just looking at this chart and looking at this signature, what does this tell me? It tells me danger zone. The semi is coming. He's not paying attention. You know, we're about to get T-boned. Yellow light flashing. Maybe we should stop. Maybe we should hit the brakes. You know, and then on top of that, obviously, we're towards the end of the month. This is an extremely bearish candle right here. As far as candlestick patterns go, you know, a shooting star is typically a topping pattern. What does that tell us? It tells us price pushed it upside aggressively, very aggressively. And it tells us the market rejected higher prices. People sold into this. Why are people selling a blue sky breakout? Blue sky breakout, there's no resistance. There's no reason for people to sell. Well, somebody else must be thinking we're topping out here. And it's not just, you know, average Joe. I mean, this is market makers doing this. So aggressive candle right here afterwards looks good, looks okay. You know, only 2 days left before that closes. Does it invalidate this? Does it push up here and then it rolls over? I mean, we're definitely seeing warning signs on transportation sector. And also, again, you know, some people don't like to validate the time cycle analysis, but we see every single, you know, time when we topped. Some were just little mini tops, some were mini bottoms, but we see that the key pivots happen, you know, in every time, you know, in like the January, February, March, every once in a while December. So we have like a 3 or 4 month danger zone out of the year. So if we see a bunch of warning signs and we're inside that danger zone, the double danger zone, in my opinion, we also see that each time previously we were operating inside of this ascending channel. Once we break down from the channel, we see our capitulation move operating inside this channel. We break down from the channel, we double top, and then we see that next capitulation, you know, basically triple top essentially right here. And now here we have another ascending channel, broke down from it. We're coming up here, and potentially, are we doing that double top again? Are we going to come up, put in a triple top? Are we going to invalidate this? And it's like, fuck you, it's different this time. Again, any of those are a possibility, but I don't like the odds. When the market's sitting here telling me, hey, it's looking kind of sketchy, looking pretty sketchy. The last couple times this happened, it was Wreck City in this bitch. I'm going to listen. I trust the market. Hail. So obviously, looking pretty damn weak here. Topped out, could not take out. See, these are the key levels we were watching on a bunch of these other stocks or ETFs. You know, like the previous highs, invalidate them, move up to the next one, then all-time highs, and then just rip into the upside. We know what happened right here. We know that this was, you know, that Avis Hertz bullshit. The Tesla orders, the Avis, you know, meme stock pump. But what we know now is we lost that level. We couldn't even hold it as support. And now we're back inside that triangle again. So we basically got our breakout, a failed breakout or a pathetic, you know, underperforming measure move. And now here we are. We have rolled over officially into a bear market. So the 200 simple rolled to the downside, 200 exponential rolled to the downside. We attempted to save that level and got rejected. Typically what happens now is we get continuation to the downside. We also took out the low right here. So now we have a high, then we have this low, then we have a lower high, and now we have a higher low. I'm sorry, a lower low. So to me, this is a confirmed downtrend. This is officially inside of a bear market, and it looks like trash. It really does. There's not a lot of support below this levels because there wasn't a lot of price action on the way up here. So, you know, we move pretty aggressively to the upside through this level. So if we start to lose these levels, we're going to move pretty aggressively to the downside. So does not seem unrealistic to me that we start to threaten some of these key levels. And then obviously we have our Fibonacci in place from the bottom right here to the top. So if we, you know, we come down next to the 236. So we break down from this green support right here, which was basically what held these last couple times. If we break down from that, I fully expect the 236 to get hit almost immediately, you know, $50. And then after that, you know, again, there's not much support along the way up here. So the 382 starts looking pretty juicy. So at $40, we can reevaluate. You know, we'll see what's happening in the rest of the markets. We'll see what this is starting to look like. We'll see what the indicator oscillators look like, etc. But seems very likely that this thing is getting ready to put in an aggressive downside move. So initial target right here, 236. But the real target we're paying attention to and what we expect is, and keep in mind when I draw these targets on here too, you know, I'm not drawing like saying it has to hit this target at this exact time or anything. You know, it's more the levels than the time. I'll do time cycle analysis sometimes on things for like important reasons, for like seasonal things, or, you know, something like Bitcoin where we have a typical like 4-year cycle, or whatever, transportation where we often see things topping out a certain time of year, etc. But it doesn't have to be like right when I put the box there to a T. The level is more important than when we get there. So this is our real target 382. Then we'll start paying attention to this, you know, when we make it to that level. I do want to look at the longer time frame on this though and see how it looks. So we're basically we see the 236 lines up with the 21 on the monthly. We see the hard sell signal aggressively coming down on the monthly. We see all red histograms on the monthly. I mean, this thing looks terrible. Again, we see on the monthly here too, perfect example. What is this? What did we just talk about? That's our shooting star doji rejection. Okay, we see another one right here, shooting star rejection. And both times we see continuation of downside. Is that always the case? No, it's not. But this is the market clearly rejecting on a monthly time frame higher prices. So this isn't just average Joe. This isn't Jane. You know, this isn't you and me. This is the actual market, the market makers, the movers, the whales, smart money saying, I don't think so, bitch. And then Jets will go to next. Again, you know, one of my least favorite ETFs. I mean, this thing looks like total trash. Breaking down from our key ascending green line support. Very much in a bear market. Has broken down, slopes it to the downside. You know, we tried multiple times to get back above here. We talked about this was a double top, and a breakdown from that double top was likely to give us a measure move to the downside, which did in fact. I think we had a couple measure moves in place. But basically that measure move has all but played out. So basically we would take from the top to the neckline, and then the break to the neckline to the down right here. I think I might have deleted some stuff off this chart just to kind of clean it up a little bit. So that's what we're paying attention to. And, you know, obviously that initial move has played out. Now it looks like we're trying to put in a double bottom, putting in a W. So what are we going to do? We push back up here and retest the 236. Maybe it's possible. You know, we're seeing some potential reversion to the mean type move, but I don't know. I doubt it. And this looks so bad. When we really zoom out and take a look at this, I mean, it looks so terrible. I mean, look at this on the monthly and tell me, are you bullish or bearish on this chart? Does this look good or bad to you? I'm going to really quick get a drink. Hang on one second. All right, got that raspy throat. I'll jump in chat here in a minute and cut up with you guys in a second. But I mean, when we really zoom out and look at this, I mean, when this thing topped out in 2018, it looks terrible. I'm sorry. That's horrible. And then we basically consolidated around forever and then went to zero. I mean, not literally zero, but it's damn near as close as possible. Here's our pushback up, and now we're rolling back over. 821 have crossed the downside. Hard sell signal. This looks terrible. So it's like, oh, airlines are going to recover. Value plays, cruise lines and airlines and international travel will be back and business travel will be back. How about never? How about never? I mean, we're at support. This was our support forever. We never broke down below that support in all these years. Never broke down below it except for with one giant thick red candle. And now here we are back below it. So now this support, what was support forever, is now resistance. So if we don't close back above it this month, I mean, where do we go? Just big, thick red candles start showing up? And what, airlines, another bailout, another scariant? I mean, who knows? I don't know what it's going to look like. But I'll tell you one thing right now. The chart's telling us, oh, hell no. But again, we could have a little pushback up here short term. But what's really going to happen? Trash. Airlines are trash. Absolute trash. UPS. looks strong here, still inside the range, at the top of the range. Obviously, we were talking about this seasonally. We expected strength into the end of the year. Could have probably scalped this back to upside. Already had some very nice plays on UPS with these gap fills and measure moves and everything. But as far as I'm concerned, basically just oscillating inside this range. We could easily put in a new all-time high. I think likely this resistance will be difficult to get through. So in the event that we break through this resistance, consolidate, we can start looking at measure moves to the upside. But at this point in time, the most likely situation to me, the most likely thing that's going to occur to me is sideways price action. I do not think we're going to break out to the upside. If we do break to the upside, we could do the measure move of the actual channel itself. And that's just going to give us basically our target up here of like 244. I think that is unlikely to happen right now. It is definitely possible, but it's unlikely, as more often than not, when we trade inside of a range, the longer we trade inside that range, the longer we are going to continue trading inside that range. I would not be surprised to see a failed breakdown or a spring like this, but instead a throwover or a failed breakout to the upside, and then just come right back down and trade inside this range again. And again, got to be very careful with transportation sector, as typically around this time of year is when we see like those micro and macro tops. I mean, not as clearly, obviously, as like the overall transportation sector, but here we see this top was December, January 2004, 2005. And then we can see right here, this was January 2018. Those are like our two very clear macro tops that we had happen. And I suspect that if we just kind of like broke down and looked at some of these other ones, we would see that this is December 2007 as it's rolling over. We can see obviously there's a cyclical nature to this. This is January 2015. We see it rolling over. So if I was going to predict when would be a potential time when UPS would top out and roll over when it's already at resistance at the top of the range after a parabolic move to the upside, and now all of a sudden it's looking like a cyclical type top when we're getting a hard sell signal on the monthly and we have just exited the bullish control zone. How does UPS look to me? I mean, it looks good, but danger. Danger, Will Robinson. So let's revisit this in a month or 3 months or 6 months, and we'll see how this plays out, because I suspect it's going to play out consolidation and then a dump to the downside. I suspect more likely than not, if you ask me 6 months from now, is UPS trading higher or lower than where it's at now, regardless of what it does in the meantime, I would tell you it's probably trading much lower. Much lower. I mean, 33 to 50% lower. And that's if we're lucky. So that's UPS. FedEx, I mean, still trying to play out that measure move. Back above the 200 exponential, back above that key resistance. I still think we come up to 200 simple. We're almost there. $269. Definitely on borrowed time. And, we just looked at the UPS chart. So let's look at the FedEx chart now and see what the difference is. UPS looked much, much, much stronger than the FedEx chart did. We have a giant megaphone pattern, ascending, broadening wedge taking place right here. We topped out at the top of the wedge, 1 point, 2 points basically, and then 3 or 4, depending how you want to look at that. We have a very clear bottom right here, and then a lower low bottom right here each time we put in higher highs. So we're putting in consistent higher highs and, lower lows. So more than likely what happens here, in my opinion, more than likely what happens is we break down, we retest the heart line, and then probably put in another lower low. So we have quite a bit of support along the way at 180. Then we have the 200s at like 150. Then we have, basically that 109 level. But again, we see the top here corresponded with a hard sell signal and the bullish control zone. That was our top. We see here hard sell signal and the exit of the bullish control zone. That was our top. And now here we see once again hard sell signal, exit of the bullish control zone. And each of those times we saw the 821 roll to the downside, 821 roll to the downside, and now here we are in danger of the 821 rolling to the downside. So it's worth paying attention to. If you told me right now, hey, you got to buy either UPS or FedEx, which one's it going to be? Put me down for the shit brown. You know what I'm saying? That downtown shit brown. Because UPS looks way better than FedEx does. And neither one looks good. So PAVE, obviously like that infrastructure ETF, still basically just consolidating at the top of the range. Looks okay. Basically at highs. Looks pretty strong. Short term, I mean, got to be careful. It looks like it potentially could run here or top out. Could go either way. We have basically a potential W, like bottom pattern right here, in which case we would expect a nice powerful breakout to the upside, but that could just as easily turn into, a rejection double top, and then, that same measure move to the downside. So at resistance, I don't love it right now, but when we look at the longer time frame, I mean, it looks great. Definitely momentum, strong, powerful move to the upside. But again, we're seeing hard sell signal and, still well inside the bullish control zone. But the fact that we're losing strength in a parabolic trend to the upside, I mean, we're still a ways up here. So it's definitely not in danger in the same way as some of these other charts are, but it's been a good run. Like, and let's be real, there's no infrastructure there. It's going to be like, by the time everybody takes their cut and they're like, all right, we got 3 trillion, and then we got to divide it up between the politicians and the contractors, and everybody takes their cut, and then we're going to put trillions of dollars into infrastructure while prices are at all-time highs for all these things, and there's a massive labor shortage. And when it's all said and done, they're like, we're going to build 1 bridge and fix 3 roads, and we have $9 to do it with out of the 3 trillion we started with. I mean, that's how I picture government. I don't know. That's what I picture when you say we're going to spend $3 trillion on infrastructure. I'm like, great. What are you going to do with that $9? So yeah, let me see what you guys got going on over here. Appreciate everybody participating in the chat. Soto says hi. Yep, loud and clear. Appreciate you, brother. The bots got blocked. Callan Reed says, I for one really appreciate your thoughts on markets. Thank you for the videos, man. Of course, brother. That's what I'm here for. Definitely here to share the knowledge, help out. It is important, however, to remember that this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Skeptic 33. Or wait, Septic? Sorry. Hey, have you ever looked at the chart for HEX? What do you make of it? I guess you're ignoring it. Everyone does. Missing out on monster action, if so. I mean, or maybe I was just in the middle of a stream, so I don't just like stop every time someone comments something and then immediately like run over like some kind of cuck and like do technical analysis on the one ticker that they mention. But anyway, what's my opinion on HEX? Well, if you go back to, before HEX even came out, and you listen to what my opinion was on HEX from the very beginning, it was that Richard Hart is an extremely intelligent man. And, if you do your due diligence on him, he's been in the crypto space for a long time, built an actual project that makes sense. What is HEX? What is the actual like fundamental of HEX? What's the purpose of HEX? What does it do? What is it? It's essentially a crypto equivalent of a bond. It's basically a crypto bond. It was audited. It was, technically fully decentralized. He took every step necessary to, protect himself from regulators. The complete opposite of what we're seeing now with all these other shitcoins, including like XRP that's currently, suffering the wrath of regulators. So what is my opinion on HEX? The same thing it's always been. Richard Hart is an intelligent man and created something that serves a purpose. So already he beats out 99% of other cryptocurrencies. So for as far as your smart ass comment goes, yes, I think HEX is better than 99% of other cryptocurrencies. What do I think of what he's doing now? With like, it seems like now, I mean, I don't keep up with him, but it seems like he comes up with like another something like every day, week, year. He's got like something new going on. But I mean, he's an anthropologist. Wait, That's not the one. I mean, he is. He's doing good work for like charity, raising a bunch of money. Smart dude, protecting himself, creating things that have an actual use. If you've ever heard him go on one of like his long like tirade rant deals or whatever, and he starts talking about how all this wealth is created and it should be reinvested into like, health and curing cancer and diseases and, poverty and all this stuff, raising the overall like minimum standard of living for like humans as a whole. I think he's a fucking genius. I think everything he says makes perfect sense. Do I believe in every single little project that he creates? I honestly just don't know enough about them. But I know Hex is sound. I mean, it's legit. Is it a good idea to buy Hex right now? I don't know. That's up to you. I mean, it's gone absolutely parabolic. So is now a good time? That's up to you. But the actual project itself, the fact that it actually serves a purpose, yeah. I mean, it's a crypto bond. So it makes perfect sense with incentives to not sell it. So sure, Hex is great. Will he talk about Bitcoin? Says Al CH. Yeah, I'm about to do crypto right now, brother. Sodos, appreciate you, brother. Bot says nothing because it's blocked. Al says, so everything is due to dump. I mean, not like tomorrow, but we're seeing some clear topping signals for sure. Cash is king of 2022. How about Apple and Google? Yeah, I mean, look at cash as like an option. What do you do with cash? Oh, inflation, you're losing 6% per year. Well, you're not just holding cash indefinitely for like years on end. You're saving cash and looking for opportunity to deploy it. So everybody that said, inflation is 6% or 10% or 15%, so you're losing buying power by sitting in cash, you're stupid. Well, now I can buy all these tech stocks. I can buy Cathie Wood's ARK fund. I can buy, Zoom. I can buy Teladoc. I can buy all these things at 66% discount. So sure, I lost 6% buying power, but I can buy 66% more of the things that, I want to buy. So it's an option in my opinion. I like to keep at all times between 10 and, on the absolute highest end, like 30% cash. But also you have to look at it as, are you talking about percentage of your investment portfolio, percentage of your, trading portfolio, percentage of your net worth, because that changes the percentages. But as far as like, trading or investment portfolio, I mean, a lot of times in my trading portfolio, I'll have more than, 10% in cash. Sometimes I'll have more than 30% in cash because I'm waiting for the perfect, swing or scalp trade opportunities. And oftentimes multiple opportunities present themselves at the same time. Like, I might have 50% of my crypto portfolio or 75% of my crypto portfolio in cash. And then all of a sudden I might deploy, 75% of that all at once because all of a sudden a bunch of trade setups look favorable, because they're all so correlated with Bitcoin. And that's not uncommon for me. Do I think it's a good idea to just hold tons of cash for like decades on end? No, it's fucking stupid. Because we know the goal of central banks and Federal Reserve and, essentially like the 1%, the man, whatever you want to call it, their goal, the Federal Reserve specifically says we want inflation. We want minimum 2% inflation per year. And that's assuming that, you trust their way of calculating it or agree with it or whatever. But in all reality, if we had just assume that there's roughly 2 to 5% inflation per year on average, depending regardless how you calculate it, no, you don't want to just sit on cash forever. But you always hear that argument like, well, cash is down 95% or 97% and it's going to go down the other 2% and then it's going to go to zero. Well, sure, if you earned dollar bills 100 years ago and you just got them passed down to you, or you're just old as fuck and you just held on to them, sure, your purchasing power eroded away. But most people don't have 100-year-old dollar bills that they earn. Most people earn their dollar bills today or yesterday or a couple months ago or a couple years ago. So no, I don't think it's a good idea to just sit on cash, but I look at cash as an option. It's an option to buy whatever is down more to make up for that purchasing power. Because the other alternative is you're 100% invested all the time. And then when something goes down, you have to sell something else. And I don't want to be in that position, because the truth is just about everything is correlated. When we saw the CVD dump, what happened? Crypto dumped massively. Stocks dumped massively. Gold and silver dumped. Not quite as bad, but pretty fucking bad. Real estate, I mean, not very liquid, and was not exactly a seller's market when you couldn't like show your house and nobody wanted to come to it or what. So that was the perfect time to have cash. And of course I did, because, you know, we saw that coming. So we were able to deploy that, you know, at a comfortable level and then take advantage of it. So in my opinion, should you always have a fat stack of cash just sitting around? No, you should have enough that if you need it, you have it. But I think always having a cash position between 10 and 30% is pretty realistic. And 30% is on the way, way high side normally. But with everything going on now, with everything that was going on leading up to, you know, 2018 and the big dump, I mean, but we see it coming though. I don't just recommend everybody just keeps 30% of their retirement portfolio in cash just sitting around waiting for a dump that might never come. But if you're looking at charts, you're looking at, you know, canary in the coal mines, you're looking at semiconductors, you're looking at transport sectors, you're looking at yield curve inversions, you're looking at all these different things telling us like, hang on a minute, there's something going on here. It's a different situation. But, you know, this also, I do this full time. I'm looking at charts all day, every day. I got my eye on the markets, my thumb on the markets. You know, I'm deep. Not everybody's in that situation, you know. It's the difference between active and passive, you know. So Apple and Google, obviously very strong. Would not be surprised to see in the near future, my friend, them to just go absolutely parabolic, or also to, you know, just take a big hit. So we'll look at crypto next, and then I'll go into like tech and friends, including like Apple, Google, Microsoft, Nvidia, all that stuff. So, oh, I got you, Scott. Is it septic? I can never tell with people if that's like meant to be something else and it's just spelled different for whatever. Yeah. And I wasn't trying to be a dick or anything, man. You just got to understand, like, I don't look at the comments when I'm running through all these algos, and then I just take a break and I jump in comments, interact with you guys, answer questions, take asset requests, etc. So yeah, respect to you too, my friend. You know, again, like I mean, I've known Richard Hart, not personally, but, you know, been following him, his works, his predictions, his projects for, I mean, like something like 7 years, something like that, 6 years. So, you know, I know his predictions. He's had some killer predictions on lows and highs for like Bitcoin and cycles, like tops and bottoms. He's made some absolutely phenomenal predictions, you know, but he's also said some crazy ass things and can come off as a total prick to people. I mean, I can see why people don't like him, but the fact of the matter is, when he was building Hex, it made perfect sense to me. If somebody was like, hey, I'm going to build something, and I'm like, oh, cool, okay. Or I'm going to start a business, and I'm like, oh, cool, what business are you going to start? And you're like, I'm going to start a business that does this. And I'm like, oh, great. Is there a need for that? Does anybody want that? Does anybody need it? Is it going to make money? And you're like, well, no, but it's a good business, right? I'd be like, no, it's fucking stupid. Now, if you say, I'm going to take something that already exists, bonds, and then I'm going to make them digital, and then I'm going to make them even better, and then I'm going to decentralize it to protect myself and the project from regulations, I'd be like, that sounds fucking great. And that's exactly what I said about Hex in the beginning. It's genius. And onboarding new users by basically airdropping to everybody that has Bitcoin, smart fucking thing to do. It's the same thing that all these like companies do right now, where they basically, you know, pay a bunch of money for a customer acquisition when they make no money. They're like, oh, I'm going to do all this stuff and give away all this and do all these promotions to get people to use my product. And then eventually I'll be able to make money and I'll have all these users. That's basically what you're doing when you airdrop people, you know, something useful. Appreciate your answer about net worth. For sure, man, for sure. My question was a test. You pass with flying colors. Most fail. Of course they do, man. Because people, you know, a lot of people hear Richard Hart and the way he talks, or look at him, or heard something about him and they're like, oh, fuck him, man. He's a douchebag, whatever. He's cocky. He's whatever. Sure, I don't care. I mean, it's like same people's argument with like Donald Trump. It's like, I mean, do you hate him because he's cocky, or he looks like a fool, or he said something mean, or do you hate him for like legitimate reasons? Because like some people that are pricks are absolute geniuses. So if you tell me you don't like Richard Hart but you like money, I say, oh, great. That's perfectly fine. That's your opinion. You know, but if you say, I don't like Richard Hart, therefore I'm not going to take advantage of, you know, a situation to make money, I'd say, well, you're stupid. Okay, skeptic. English spelling. No worries. Okay, I got you. English as in like British, Britain, England. I got you. Yeah, I mean, with YouTube, you never know. There's so many, like, somebody took a name that you want already. It's like, start mixing in whatever it takes to be able to, like, get across your point. So, let's take a look at our cryptocurrencies and keep on rolling here. Keep on ripping. Let me take a quick swig and we'll jump right back in. All right. And I appreciate everybody that is tuned in for the live stream today. As most of you probably know, we do go live every Wednesday and Sunday, 8 p.m. Eastern Standard Time, and typically go from anywhere from roughly like 4 hours, and do technical analysis on basically anything that anyone is interested in, but specifically looking at like dollar, treasuries, cryptos, commodities. I mean, basically everything, anything and everything you could look at. So looking at our Bitcoin futures chart, we are 100% in the danger zone. So let's do a quick recap here. But obviously I just recently put out the deep dive on Bitcoin. If you haven't watched that and you're interested in crypto or the cycles or whatever, I highly recommend that you watch that video. Highly recommend it. Because I'm going to give you an unbiased view, with very, very bearish targets and very, very bullish targets. But the truth is, they're all viable. So the short version of it, though, looking at the CME futures chart, we know that this chart originated at the top of our previous 4-year cycle, which was basically 2017, 2018. Went into a full-on bear market, crossed back into the bull market, right around April of 2019. And we saw from there, obviously, we flipped over the TJD Master 200 exponential and simple slope, started moving to the upside, had a little hiccup here during like the CVD area, but then we crossed back again to the upside. And now we see for the first time since that second cross basically took place in July of 2020, when we ran up from $8,500, we are now threatening this trend. And, the way I obviously determine trend is not only the orientation of the 200 exponential and simple, but the slope, and the indicator just flips the color when the slope goes negative. So here we saw the 200 exponential flashed red a couple times and the slope went negative, but the 200 simple had a positive slope this whole time. So the futures chart never gave us a false signal. We were able to capitalize on triple bearish divergence here, took advantage of that. We were able to capitalize on triple bullish divergence here, took advantage of that. And now here we are again at the top of the range. And what's taking place right now? Let's just take off the actual price action of the chart really quick. And we can see here the 200 simple is now officially pink. It has rolled over. And now the 200 exponential threatened it 1 time, 2 times, and now here's a 3rd time. So this is the first time we have seen in this entire trend since $8,000, since basically like June last year, that we are potentially threatening this trend. And when we flip this trend, if we flip this trend to the downside, it's a confirmed bear market. Confirmed bear market. I mean, based on how I determine it and most other intelligent people, or educated or experienced, whatever word you want to use there. So we're threatening a bear market right now. We're below the 200 exponential. The slope on both these is technically negative. Now here we went negative. We recouped. Here we went negative. We recouped and put in a higher high than that previous little high right here. But now here we are back down at that same level again. And we all know that the more times we hit a support and don't bounce aggressively off of it, the more likely we are to break through it. And the example I like to use is, picture, you hold a ball up in the air and there's a table down here, and the 200 exponential and simple moving average are the table. Okay. And we drop this bouncy ball and, maybe it hits something on the way down. It has a little bounce, and then it hits the table, has a little bounce, bounce, bounce. And then eventually it just starts to roll, and then it rolls, and then eventually it falls off the edge of the table. And that's how I look at support and resistance. That's support, obviously, that analogy right there. Think about resistance the other way around. Think about resistance as releasing a balloon full of helium. If price action is down here and we release the balloon, the first time it hits, it's going to bounce. And then the second time, bounce, bounce, bounce. And then eventually, the whatever was stopping it, the roof or the ceiling or whatever, it kind of just bounces to the side. And then eventually it gets outside, gets out the window or the door or whatever. And then it just floats to the sky. And that's how I look at support and resistance. The more time we touch a support, the more likely we are to break through it. So I don't like how this price action looks right now. That's not good to me. We're very close to confirming into a bear market. We also see some other signs here, of potential damage incoming. Now, maybe we're bottoming because we see ourselves in the bearish control zone. I don't look at it that way. I look at it as we were inside the bullish control zone almost exclusively, either neutral or bullish control zone. So we see either black in the background, which is neutral, or we see red in the background, which is bullish control zone. Predominantly this entire run up. And then we see, one little sliver of green right here, basically at the bottom. So obviously we didn't want to sell that. That would have been the worst time to sell. We see during the CVD dump a pretty aggressive chunk right there. We see the little area leading up to it a couple times. But now during an actual bear market, we see the opposite taking place. We see much more green than red as the bears are in control throughout this time. We're underneath the 200 exponential and simple, which unfortunately they're not populated on this chart, but we'll go to the spot market soon. But we see the bears are in control predominantly, and we only occasionally see the bulls in control. And each time the bulls take control, that was like a macro top followed by continuation to the downside. So that's why we trade with the trend. It's so important. So there's some transition periods where you might see a difference. But once we're in the bull trend right here, once we start to see the bears taking control, that's telling us that there's a possibility that we're actually getting ready to reverse, that the trend is getting ready to potentially end. So there's a lot of red flags going on here. So, and then obviously coming on the end of the year, let's look at our monthly chart. So we're still looking okay on the monthly. Potential. Looks like we're getting ready to print some monthly bearish divergence. So we have a top right here, and then we have a lower high right here. So potential monthly divergences. Here we have a high, and then we have a higher high right here. So you could say it's already printed, but technically we want to see at least one red histogram print, which would be like 2 days from now. I typically don't call like the actual top of something until we see 2 red histograms print. But, as long as there's some kind of peak and corresponding price action, it's definitely worth noting. So now let's look at our Bitstamp chart, because that's going to give us a little more accurate of a picture as we have like more than like our 2017 time frame. So again, we can look back here and see now our 2017 bull market top and see how that corresponded with the moving averages and price action. So here was our 2013, 2014 top, and we see once the 200 exponential and simple rolled over, we had initially 200 exponential, retested 200 simple, and then we went into a bear market. And we know, again, I'm not trying to just FUD Bitcoin or hurt anyone's feelings, but let's be real here. That was an 86.75% drawdown, 86% from the top to the bottom. And until we confirm back into a bull trend, that was 685 days. So from the top to re-entering a bull market was almost 2 years and 85% drawdown. So I'm not being mean, I'm being real. And then we went into a parabolic bull run, looked great. The whole time we stay above the blue moving averages, both have positive slope to the upside, looks thick and juicy. All you got to do is just sit back and count your money. Perfect. That's the easiest way to do it. Next was a 2017 top. Again, we threatened the moving averages a little bit, bounce them a couple times, lose the 200 exponential, come back up, retest the 200 simple, get rejected, and then look, flip the 200 simple blue, flip the 200 simple pink, flip the 200 exponential red, and look at that, bear market. And what happens? From the peak to the trough, obviously it's not realistic to say I sold the absolute top and bought the absolute bottom. 84%. 84% drawdown. So we see 80+% drawdowns from peak to trough, both in the exact same situation. So here we cross back above the 200 exponential. The 200 simple eventually gets positive slope on it, and time frame 500 plus days, 508 days. So we're talking about, you know, a year and a half and 85% drawdown. So then again here, you know, we have our little mini bull market. You know, arguably the tether / OneCoin fiasco. If you're not familiar with that, it's worth looking into. But basically, massive scam, Ponzi scheme, like Tether and OneCoin run up, followed by our CVD dump, whatever, Black Swan, who cares? Regardless, you know, we do flip back over the 200 exponential and simple right here, try to save them, and then actually have that capitulation move. So then once we rally them, once we recoup, once we go back into our parabolic bull run, we notice all blue this whole time. We get that initial breakdown from the 200 exponential. We get a little teeny false signal right here, but we're able to save it off that bullish divergence. And then here we see the 200 simple starts rolling over, recoup it, put in a new all-time high, and now here we are in the danger zone. 200 exponential, once again, has a red slope. We're underneath it. We're underneath the 200 simple. It does still technically have a blue slope for now, but this is 100% the danger zone. And then again, just looking at the indicator oscillator here, we see that throughout the bear market, we see much more green than red, as the bears are in control more often than the bulls are in control. And then here, bulls take control very clearly. Here we have a couple dabs from the bears, you know, in the CVD dump. Here, the bulls very clearly take back control. We can see by the red highlighted areas. And then here, we're starting to see more and more green. Do we have to go into a bear market? No. Do we have to capitulate? No. But we're seeing something different. We didn't see any big clusters of green this whole run up. And we had very clear, strong slope on the 200 exponential and simple. Here, we're seeing, you know, weakness, consolidation, breaking down from these levels. We're seeing bears taking over control here. We don't like that. We're seeing a 4-year cycle, you know, potentially playing out. We're seeing, you know, a lot of key things taking place here. Just a quick little recap. You know, I explained this full video in for like the Bitcoin cycle and everything. In that video, I was telling you to check out if you don't watch it already. But this is our 2013, 2014 top in red right here. This is our 2013, 2014 top in red right here. And that's roughly, you know, almost exactly 4 years apart. And then this is almost exactly 4 years apart again. And it's written into Bitcoin's code to top every 4 years. You know, basically we have like the halving cycle built into it. So lengthening cycles, I don't think so. I don't see anything so far. So, and then here we have the bottom basically playing out right here from 2015 bear market low. And then here we have the bottom playing out from the 2018, 19 bear market low. And then here we have potentially extrapolated into the future based on, you know, time cycle analysis, that low coming in around January of 2023. So we're going into January 2022. So are we potentially entering into a 1-year bear market? I mean, it sure looks like it. Maybe it goes a little longer. Maybe we front run the bottom. Anything could happen, but based on what's happened previously, looks very probable. So, and then I break down all the different fib levels and exactly what's going on with this chart. Again, if you haven't checked it out, highly recommend it. We see here at the absolute top, we get the hard sell signal on the monthly. We don't have population right here, but, you know, we could imagine the same thing would have happened if we did have that populated longer on the monthly. And then here we see leaving the bullish control zone, the hard sell signal takes place here at basically what amounts to potential double top, bearish divergence between price action and the indicator oscillator. It's worth paying attention to. I mean, it might not be something, but it's not nothing. So again, we're all about protecting our principle and actual technical analysis, not like our heart and feelings and what we want to happen and praying for gains. I'm not going to go to bed and pray and, you know, hope Bitcoin goes higher because I want to be, you know, living in the Citadel with my homies. I'd rather just do technical analysis and make money the easy way. So much easier this way. You put in the work and it's so much more consistent and easy, and you can have full confidence in what you're doing, you know, because you're using measurable, repeatable patterns, steps, etc. So, and you know, these, I didn't make up the moving averages. I didn't make up these techniques. You know, a lot of these go back to the mid 1800s, 1900s, you know. So I'd say they're reliable. Ethereum, again, looking a little bit toppy here. Definitely seeing some weakness. We are now officially, you know, we had that Kraken wick down to the 200 exponential. We don't see this taking place on most exchanges. This was obviously a liquidity issue. But we see now that we're retesting those previous tops right here and the 200 exponential potentially. Maybe the 200 simple this time. So the areas to watch are obviously like around 3,500 on the lower end, 33.73. We know that Ethereum has been staying strong in comparison to Bitcoin, but we're definitely starting to see some weakness. We have a very clear descending channel taking place right here. We've been very much respecting that channel with the exception of a couple little like outlier, you know, wicks and whatever. And now we have technically broken down from that channel. Now, arguably, I could have it drawn slightly different, you know. So maybe, depending on what exchange you're on or whatever, maybe we're still kind of holding the bottom of the channel. I don't think so. Again, you go on a different exchange, though, maybe this is slightly still inside the channel. So while we're not overly bearish yet, the probability of further breakdown looks very high. And then when we look at our daily chart and zoom way out to this entire bull run, this is going back to March of 2020, we very clearly are operating inside of, you know, this channel. Matter of fact, let's go to a longer time frame and we can get a little more clear of a picture of what's taking place. You know what? We should do the weekly. I don't really need the monthly. We'll do the weekly and just kind of look at what's taking place here. So we see very clear, you know, we obviously have multiple touches on the bottom, including our like Kraken wicks. Multiple touches on the bottom. We have the initial point right here. We have a touch right here. And then, you know, a touch and burst out through the upside here. So not as much clear resistance on the top. But when we look at the heart line, we can very clearly see resistance, resistance, and support. Support, you know, some pretty clear support through here. And now it's acting as resistance once again. So we know that other people are using the same channel. So now we have broken out of the macro channel to the downside, and we're still inside of, but potentially breaking out of that little micro channel to the downside. And then here on the weekly, we have the hard sell signal. We're leaving the bullish control zone. We know the last time we did that, you know, we had quite a bit of a drawdown here, but that was still inside the channel from the top of it. We know here we had that same signature consolidated, but we're still inside the channel and found support. So we need to be careful here. You know, this was the OneCoin 2014 or 2019 rather. Oh no, that wasn't the OneCoin one. That was the pre-bull run market dump right there. And then this was our 2018 top right here. This was the top of the previous Bitcoin cycle. And again, we see that same hard sell signal. We see the same histogram selling off. You know, we see that same bearish divergence on the weekly taking place. We're definitely seeing, you know, breaking down from a key channel we've been inside for a while. Bearish divergence on the weekly time frame. 4-year cycle. We're seeing some clear indications that we would be stupid to ignore. Hard sell signal on the monthly. First red histogram on the monthly. Hasn't printed yet. We still have a couple days to print that red histogram. Maybe we rally back up here, but definitely worth paying attention to. Definitely worth paying attention to. And we can assume if we break down from this channel, we're still at the 8, which has been acting as support the entire bull run up here. So we could assume that our next support would be the 21. So we could assume that ETH would be targeting like 22.79 roughly, roughly to the dollar. But yeah, I mean, you know, when we kind of zoom out here and take a look, you know, we're threatening the 200 exponential and simple. We're breaking down from a key channel that we've been in the whole bull run. We're breaking down from a descending channel that we've been in, you know, for the last like month or so. Got to be careful. We're seeing some big warning signs, you know, from the stock market, from the, you know, I mean, is ETH an altcoin? I mean, yeah, technically it's not really, I don't think it falls in the shitcoin category, but it's definitely an altcoin. But, you know, I consider Bitcoin, Ethereum, and a couple others to be like substantial, you know, market indicators. So when we start to see those in the same way that we see like the indexes, or like big spaces or sectors within the stock market, putting in like topping signals, it's worth paying attention to, especially when we see like some of that cyclical or time cycle analysis. So ETH to Bitcoin ratio, we obviously had a couple patterns play out here, some nice little moves, but now here we have broken out and we're starting to roll over. We're seeing the 821 cross taking place. We're breaking down from, this little topping pattern here. So more likely than not, the previous time we saw a pretty big drawdown in ETH's value in relation to Bitcoin. Here we saw a little fake out. And then here was the initial topping pattern. Decent little drawdown. So again, looks like if we're going to be in ETH or Bitcoin, it looks like we'd rather be in Bitcoin right now. So total crypto cap. Once again, we're seeing basically the attempt to save the 821 cross to the downside like we discussed. We see a massive rejection and potential bearish engulfing candle. We'll know in like 4 days. We'll have to wait and see. This on the weekly. We do see that hard sell signal come out of the bullish control zone. Last time we saw that was right before that massive capitulation dump, where crypto basically went from 2.6 trillion to 1.12 trillion. So, we lost like 60+% of the market cap. So do we want to see 60% drawdown? No. Is it worth de-risking a little bit to protect our capital and principal? I would say so. We're also seeing a top right here and a top right here. We're seeing a high right here and a higher high right here. I'm sorry, lower high right here, a high right here and a lower high right here. So again, we're seeing weekly bearish divergence taking place on the total crypto cap. And then also, if we look at our Fibonacci extension from our 2018 high to our 2018/19 low, our 1.618 Fibonacci extension target was hit. So this looks pretty damn toppy to me. And this is obviously the entire crypto market cap. And then if we look at our Bitcoin dominance chart, again on the weekly right here, we're seeing what we have been discussing playing out so far. We're very clearly in, a descending channel type situation. We have very clear resistance here in red. We have very clear support here in green. We have a low right here, a lower low, and then a slightly lower low once again. And then here on the indicator oscillators, we have a low, we have a higher low, and then we have a potential for, now we have to wait until this week closes, obviously, because this won't actually like print. But we're potentially looking to invalidate this bullish divergence, this third drive of bullish divergence. But we're still seeing that same bullish divergence taking place on the MACD. So, potentially 2 or 3 drives, depending on what you're looking at. And again, depending where your settings are on stochastics, or if you're using the Stoch slope or, the Jewel Thief, you might see something differently. But the fact of the matter is we're paying attention to potential bullish divergence, indicating that Bitcoin would at least revert to the top of the channel, where act as resistance, but potentially a break and retest of a 200 exponential and simple. And typically what we've seen throughout a strong, long bull market is when Bitcoin goes up, alts go up more. They gain market cap against Bitcoin. But when Bitcoin goes down severely is when we start to see the alts lose market cap, because they tend to go down more aggressively, faster. So this would imply that we are likely to see selling take place, and we're likely to see Bitcoin gain dominance in comparison to altcoins. Does it have to happen? No. But we're seeing a warning sign. Lots and lots of warning signs. So Shiba Nasty, the first of the shit coins, basically got our break from the descending channel. Underperformed for sure. Couldn't even get up to the measure move. Couldn't even get up to the target. And now here we are breaking back down. Looks like total trash rolling over. Looks pathetic. AVAX, Avalanche, breaking down, technically going into a bear market. Now we did have a little false alarm right here where 200 exponential and simple rolled over. Here we're seeing 200 exponential and simple rolling over again. Bears are clearly in control, all red histograms. Doesn't look great, but still okay for now. Obviously we took profits along the way. We saw basically that double top, had 2 really nice trades play out for, basically like 25 and 50% depending on where we took profits. But we most certainly have taken profits, and, I'm not greedy. I like to lock them in. So Solana, same thing. Had a nice position here off of that descending channel. Got the breakout. Underperformed the breakout once again, but we're able to lock in profits for the reversion of the mean of the 200 exponential and simple for over a 20% move to the upside. But now here we see Solana has already moved into a bear market, tried to save the bear market here, and now we're rolling back over. So very clearly, this is a reversion to the mean play. One of my favorite scalps, one of the final scalps you get bullishly before you start taking trades to the downside or selling the rips instead of buying the dips. So that was on the 4-hour, sorry. And the daily on Solana, 8 and 21 are crossing to the downside. Doesn't look good. Does not look good. Did I do... My bad. Did I do Avalanche on the 4-hour too? Yeah, that's my fault. Sorry. Over the weekends, I may switch up some of my charts on this screen, as this is like my second one. Avalanche 821 cross the downside. Again, hard sell signal. We're seeing no divergence taking place, but definitely some weakness. Well, some slight divergence basically as we put in the same high on the indicator oscillator for the stochastic, but a much lower high on price action, but not on the TJD TDMACD. So Solana we did. So Matic is next. So daily Matic had some absolutely beautiful trades on Matic, but once again, taking profits at the top of the channel. We have this massive ascending channel or wedge been operating like mechanically inside of that forever. So here we are once again topping out, rolling over. So targets, I'm hesitant to look for like key areas that I want to pay attention to like reaccumulate these things until I see the price action on Bitcoin, especially because the majority of these don't have like longer time frame moving averages to take in mind. But we do have on Matic the daily 200 exponential and simple down here. A break outside of this channel would likely lead to pretty aggressive selling. Also, we know that these are slightly different on different exchanges like Binance, First Kraken, etc. So arguably blue sky breakout, arguably double top, depending what exchange you're looking at. If we lose this level, we probably do come down to about $2.15. I would look at that as support in the meantime. But if we start breaking down from those levels, like $1.60 is going to look pretty thick and juicy after that. So I'm going to borrow this box from over here, and we'll just use that for our next trade as well. So that's the area I'm going to be looking at. Assuming like, Bitcoin can hold on and we rally back up and find support and we can squeeze one more juicy trade out of the crypto markets. I'm looking to accumulate it back there around like 216. But again, I'm getting, the more times this works, the less likely I am to take it and the less upside potential there is because the range is getting tighter and tighter and tighter. And typically the more times something works, the more likely it is to fail because the more people are looking at it, the more you try to manipulate those people and take their money. So, once every pleb in the market is taking advantage of these same things, it's probably not going to work anymore because everybody's on the same side of the trade. And that's when we abuse them. No offense if you're one of them that's getting abused. You just got to trade on the right side of the trade. So, keep listening to all the fundamental guys, all the crypto permables, all the guys that are like Bitcoin to 100,000 by end of year, 100%, 6-figure Bitcoin, I promise, because Plan B said so, and he's never been wrong with his hindsight technical analysis. Sure. Okay. So Chainlink, very clearly in a bear market, underperformed. We were able to take profits on that like 20% move. I probably could have juiced it a little more, but did not make it up to the second target. I honestly don't even remember where we closed the Chainlink position at. Took profits on Chainlink, what, like 22.75, somewhere around there. Yeah, so it was right around the trade setup. So, yeah, I mean, nice trade. 20%. You can't be mad about that in a couple days. Can't get greedy on these things. Again, we see that very clear shooting star rejection candle here, signaling that it's the top at essentially the 200 moving average. And then again, very clearly in a bear market, 200 exponential and simple have rolled over. They're sloped to the downside. So could this rally back to the upside and save the trend? It 100% could. Have we been riding the trend since $2? Sure. So we rode the trend from 2 to like 50. I mean 40. It was like 42. So sorry, I don't mean to exaggerate. So do we need to get greedy now over a couple pennies? No, I don't think so. And if we do take out like that 1350 level, it's going to look really, really bad. But this to me looks like a clear rejection. So the next level to watch is like 1725. After that, 1350, you know, and then it's just stair steps to the downside. And a lot of these altcoins that were big performers early are looking very weak now. So obviously people have moved on to bigger and better things, or or shittier trash bag speculative altcoins, however you want to look at it. So Polkadot, again, trying to push up here. This was a big underperformer right here. You know, we obviously took profits on Polkadot a while ago, and I mean, it hasn't really looked good since like 45 bucks. Still does not look good. I mean, technically it's still hanging on to the 200 simple. I mean, it's underneath it. It's definitely getting rejected. But again, very, very close to confirming a bear market. And this one has avoided the bear market confirmation so far. But this is about to be our first bear market confirmation. So Polkadot does not look good. You know, and if I'm looking at cryptos right now, I'm not trying to buy the weakest. You know, if I'm looking to scalp to the upside, or, you know, accumulate or whatever, if I'm bullish in these markets, I want to be bullish on the most bullish. I don't want to bet on the three-legged horse because he's the furthest behind and say, well, I mean, yeah, he's in last place. Sure, he only has 3 legs and they're going to turn him into glue if he doesn't win today. But look at the spread I can get on him. Look at the odds. I mean, he's way down. Sure, he's way down because he only has 3 legs and they're about to turn him into glue. So that's not the one I'm betting on. I'm going to bet on the guy that's out front, all juiced up on steroids, veins shooting out of its muscles. That's the horse I want. Oh, but the odds aren't as good. Sure, the odds aren't as good because he's going to win. That's why the odds aren't as good, because everybody's betting on him because he's the best one. That's how I look at my cryptos. People are like, oh, but this one's, look at the white paper and it's down 83%. Sure, because it's a piece of shit. A white paper is a marketing scheme. But no, thank you. Basic attention token. I mean, we've been out of this one for a while now. We got out at, I think, like $1.75, somewhere around there. So, I mean, I'm sure I have some bat dust around here somewhere, but not looking good right now. Still looks much better than most cryptos. It's still well above the 200 exponential and simple for now. So arguably one of the stronger cryptos, at least as of late. This thing underperformed forever. But when it did, I mean, it really ran. I really thought it was going to get to $2 too. It really screwed me by that 7 cents. I mean, not to nitpick, but I wanted that 7 cents. But very clearly got rejected off the slope line here. Looks better than most, but definitely showing some weakness. I mean, that looks awfully head and shoulders-y. I mean, we'll see. God, there's so much crap here. Let's clear out some of this. I don't even care. I mean, it's clearly head and shoulders. That's fine. It's looking pretty head and shoulders-y. But that's just shampoo. Sure it is. Sure, Ben. Sure, Benji. So Uniswap, very clearly, I mean, at this point in time, I think it's pretty clear that this is a gigantic descending triangle, as discussed, as warned about for some time now. Again, underperformer. There was no real trade setup to be had right here, and this thing is just a big underperformer. Again, was very strong early in the bull run, and you know, nobody cares about it anymore. It has fallen to the wayside. Very clearly in a bear market. Couldn't even get the retest of 200 exponential and simple. Building a little momentum here, but, you know, high, low, lower high, lower low. Very clearly in a downtrend. Could it still push back up here one more time to the top of the range? Slightly higher? Sure. I mean, but there's no meat on the bone. I mean, it's the middle of the range right now. So if it gets back to the bottom of the range, we start seeing a little strength from crypto. There's probably a scalp in there, but right now, not so much. XRP, the worst crypto that we're going to look at. It's not the actual worst crypto, but it's the worst one that still gets technical analysis by me. Terrible. terrible. I've made this joke a couple times, but imagine just being like hardcore XRP fan and you're like, I'm all in on XRP. We're going to crush it. And you're like, oh, I picked the worst one. XRP, you're an underperformer. But at least it's not at the glue factory. It's still alive. But it looks bad. I mean, bear market, breaking down, weakness, in court, fundamentally, technically, everything just terrible on this. And look, I don't mean to bust XRP chops, but let's remember here, we had a lot of cryptos put in new all-time highs by like thousands of percentages. Bitcoin previous all-time high, 20,000. Bitcoin all-time high this cycle, 70,000. Ethereum all-time high previous cycle, depending what exchange you go to, roughly 3,000. Realistically, 1,300. This cycle, over 4,000, 4,500, 4,600. So those things are like 3x times their previous all-time high. XRP has still not put in a new all-time high. Matter of fact, from its previous all-time high to its cycle high this time, it was still down 40%. And it's actually down right now 75% from its 2018 all-time high. So, I mean, it's shit. It's total garbage. Imagine having bought back here and still being down. It sucks. When do you cut your losers? When it goes to a penny. When it goes out of business. I'll never give up. I love XRP. We'll get our turn eventually. Maybe. Hopefully. Oh, man. ADA, Cardano, again, just absolute trash. Absolute trash. Buy the rumor, sell the news. I told you guys, $3. I mean, this thing has been just getting absolutely hammered since then. Not as bad as XRP because it did put in a new all-time high this cycle, but Cardano down 58%. Very, very clearly in a bear market, in a bear trend, below the 200 exponential and simple. Both have a slope to the downside. Looks like absolute trash. It had an opportunity for a pump to the upside. Couldn't even get a 27% move. Just absolute trash. 20% it moved to the upside, and now it's right back where it started. Looks terrible. Try to build some momentum, even losing that. Sushi swap by request. Let's look at this sush. That's sushaloosh. I mean, it looks pretty bad. No, it doesn't have a lot of price action. I mean, there's probably a better exchange I could be looking at, but this thing topped out in September, mid-September. It's got a new low since Kraken listed it in May of this year. And this looks bad. And I mean, it came up, reversion of the mean, retested 200 exponential and simple. Very clearly in a bear market, and has been since basically like back here in November. Had a nice little run up here, but I'll tell you what, if I was in sushi right now, whether I was in profit or at a loss, I would probably be selling into the very clear resistance that we're at right now, anticipating lower prices. This is very clearly resistance. I mean, it was very clearly resistance here. We put in a W bottoming pattern, got the measure move to the upside, came back down, found support on it here, broke down from it, reversion to the mean. It lines up almost perfectly with 200 exponential and simple. Looks terrible to me. Now, if we just, I mean, if it was me, I would de-risk, wait for this thing to just chop around for a bit, and then if it gets back above 200 exponential and simple, if it consolidates here long enough, and we see it base out like above, what, $9.50, I would just re-enter my position slightly higher. I would gladly take a small loss from selling at $9 to rebuying at $9.50 to mitigate the risk, because this looks like it's about to just roll over and go straight to, I mean, arguably, there's obviously some support along the way, but I mean, you'd be kicking yourself in the nuts if this thing goes back down to $6.25 and you didn't sell the retest to $9. And this thing's trading pretty technically. And then obviously if it breaks down from there, and again, we might be able to find a little better chart to look at than this, but if you don't tell me what chart you want to see it on, I'm just going to pull up whatever. So, but I mean, I imagine it looks, the relevant information is here. So right now I would be selling this, getting the F out of this, and then either rebuying later if it consolidates long enough above $9.50 or $10 and markets start to go back to the upside, or, potentially rebuying support at like $6.25 or $5 or, wherever it goes. It is building a little momentum. It is inside the bullish control zone, but it also just had a massive run after that capitulation move. So sure, it looks like there's momentum in its favor because it just ran 85% to the upside. But look, if you ask me, am I a buyer or a seller right here? And I have no stake in the game, don't give a damn about Sushi Swap. I'll tell you right now, I am a 98% certainty seller right here. And I'll gladly take the 2% that I'm wrong and rebuy higher and admit that I was wrong, because there's so much risk and so little reward before you figure out if you're right or not. So that's my take on Sushi Swap. Sushi. So if you were like, hey, do you want to put $100 in Sushi Swap right now, or buy $100 worth of actual sushi, raw fish, and rice, I would say I'll just gladly spend it on a good meal. MicroStrategy on the daily, clearly in a bear market, rolled over here very clearly in a bear market. 200 exponential on simple angle to the downside, retest, bear market, enter the bears. MicroStrategy went into a bull market somewhere around here at $135 when Micro Penis Sailor started running his advertising campaign for Bitcoin, which he has nothing to do with. He basically just found a way to hijack something good with his piece of shit name and reputation, ran this thing up massively, and now officially in a bear market. So if you got in at 135 because you like Michael Saylor, might be time to get out unbiasedly at 632 before Michael Saylor busts a nut in your butt, the same way he did back in 2000 when he ran up MicroStrategy stock to $3,200, $3,300, and then the SEC, came after him and charged him with securities fraud, which he pled out to and paid a fine. So he admitted guilt. He doctored the books and paid a massive multi-million-dollar fine to the SEC for securities fraud. But now he's a hero. Sure. Okay. 99% down. And let's just remember, for any new people that don't know how much of a piece of shit Michael Saylor is, 20-something years later, 22 years later, MicroStrategy is still down 83% from its all-time high. So nobody ever talks about that part. Nobody ever talks about Michael Saylor being a scammer that almost went to prison but paid his way out of it with some of the millions of dollars he scammed. Because he's a Bitcoin hero. He's a hero. It's not like there's books about him from 2000 for how much of a piece of shit scammer he is and how much of a trash bag company he is. Not like there's any books out there, if you go look it up, about how the illegal shit he did and why he's a piece of shit. But I mean, what do I know? Because he likes Bitcoin and he's our friend and he's going to help us onboard institutions. Sure. Okay. Or he's running his scam play again 20 years later. Sure. I'd say probably option B. So Robinhood. Yeah, capitulation dump, new lows. This thing just getting absolutely murdered and probably will continue to get murdered. Starting to build a little bit of bullish divergence, starting to build a little momentum, but just getting absolutely crushed. I mean, we don't even really have targets at this point in time. We'll just have to wait and see on this one. I'm buying the dip. No, the dip dipped further. Coinbase. So obviously short trade played out nicely. Nice little move up on the little long scalp right there. Again, I did not take this one. I have no interest in buying Coinbase because it's trash. It's a trash bag company. It's worth billions of dollars and doesn't do the one job that it has, which is let you trade crypto during volatile times. So no thank you. If you were like, hey, check out this car, it's awesome. And I'm like, oh, great, I'm going to drive it somewhere. And you're like, oh, it doesn't actually drive. And I'm like, really? And you're like, yeah, but it's worth $1 billion. I'm like, so you have $1 billion car that doesn't do the one thing that the car is supposed to do? And you're like, well, yeah, technically. I'd be like, nah, no, thank you. Is it a collector's item? No. Its job is to do the one thing. And I'm like, oh, okay. So you're a dumbass. But what do I know? Also, Coinbase's revenue all comes from charging people fees to make trades in a clear market, stocks and cryptos, where everybody else is literally letting you trade for free with no fees. And that's a sustainable business plan. Sure it is. And it's directly correlated to crypto, which Coinbase all-time high was in April of 2021. Bitcoin's all-time high was recently, and Coinbase did not get to a new all-time high. So let's just buy crypto if we're going to buy something in the crypto space, not trash bag Coinbase that can't even do the one job it's supposed to do. Like, but Coinbase is great. They're custodians and they're nice. And I like Coinbase. Okay, sure. Try to trade them when there's volatility in the markets. Guaranteed, you're going to get an error message and the exchange will be down and you won't be able to do the one thing that you're supposed to be able to do. Bed Bath & Beyond. Old meme stockeroonie. Looks like trash still. But, hey, there's some fundamental news. Nope, still trash. Sure. Bed Bath & Beyond is going to sell candles at someone else's store now. So the store that sells stuff is now going to sell its stuff at someone else's store. So it's going out of business. Is that so? The one thing it's supposed to do, it can't do. Sounds like Coinbase. Newegg breaking down to new lows. Obviously looks like trash. We had that target set to $8 to the downside. Obviously had some beautiful scalps here. Obviously this one not playing out. I don't even think we ended up entering that one. But yeah. Looks pretty bad. Looking like $8 is on the table. Starting to build a little momentum. Hard buy. If it leaves the bullish control zone, I mean, at this point in time, it's got to get back above 1080, which doesn't even look that lightly. And that's like a juicy move back to the upside. Let's be real. Newegg, great for buying computer parts. Not good for investing. The truth. AMC potentially putting in Head and Shoulders inverted bottoming pattern, bunch of green histograms. It's trying to base out here. We'll see if it does. I mean, 200 exponential already rolling over, 200 simple getting pretty flat here. This thing has really got to break to the upside. I mean, if you're one of these, poop throwing, pee drinking, ape-a-roonies, now's your time, okay? Because if you don't save it now, get ready to get cut in half again. Another 50% to the downside. AMC looks like trash. But Spider-Man. Okay. Okay. All right. Sure. But the Dogecoin. We can buy popcorn with our Doge. Okay. All right. GME, Game Stonkaroonie, officially in a bear market. 200 exponential and simple have rolled over. This is it, ladies and gentlemen. I mean, not much support left. 132, then maybe 120. After that, I mean, $40. It's at 150 right now. Is GameStop ready to lose 75% of its value? I mean, it sure looks like it. It's got a hard buy signal. It could just pump and skyrocket to the upside. I mean, little short squeeze action, busting nuts and shorters butts. But, I mean, looks pretty risky to me. I mean, here's the real question. If the downside target is $40, but the upside target is previous all-time high, is it worth it? Maybe. Maybe. Rather buy into it with momentum than just FOMOing in, because GameStop. DraftKings breaking down. Looks like absolute trash. Looks like it's headed down to our green target here. So I'll talk to you at $18. Probably does stop off here along the way, but I mean, this thing looks terrible. Terrible. All right, that's our crypto and friends. I'm going to jump back in chat here real quick, and then we're going to look at tech real quick. What are we at? 209. So let's try to do like 20 minutes on tech and then keep moving. Oh man, if only there were some bots spamming random things in the chat. Oh, nice. We got a couple. Thank God. Phew. At least the bots keep you guys entertained. It's awesome that YouTube is like so nice and responsible that, you know, with their like infinite algorithms and like greatness and all powerful censorship that stops me from like saying random things or like commenting on my own videos. They like somehow just can't figure out how to stop bots that post the same thing over and over again or like scam. That's weird. Fucking YouTube. That I love. That's awesome. YouTube is great. All right, so Asato says the spam around Hex on Twitter, etc., everywhere is kind of tiresome. However, well, yeah, I mean, you gotta understand too that like that's where like Richard made his money from. He basically like created spam bots. He probably created these spam bots. They're probably his. If you go back and look at like his background back in the day, like he was like a coder and he created like a bunch of like random like simple code shit that's like valuable and now like integral parts of society, including like bots, like spam bots and shit like that. So it totally makes sense that he's using the stuff he created to like pump his stuff. He said, don't mean to spam, don't want people to miss out. Think the same is true for most hexagons. Yeah, for sure. Hexagons, that's funny. It's okay here once, but I see thread writing and hijacking all the time on totally unrelated topics on Twitter. Yeah, I don't have any social media, so I can only imagine, but I mean, obviously this, but and I find most of Twitter to be pretty tiresome, really. Yes, I could totally understand that. I've never had a Twitter account, but I can only, I mean, look, let's be real. I don't need a Twitter account to figure out that it's not a free speech platform and it's full of people that are just sad and angry and hate the world and each other. I'm like, if I'm going to go somewhere where everybody hates everybody else and just talk shit and fights, like, I'll just do it in real life. I don't need to do it digitally on the internet. So DXY, again, showing that weakness we've been talking about, 821 looking across the downside. We had a couple false alarms here recently. You could argue this is just a bullish reset. I mean, look at the reason I say this is a bullish reset. Well, you're just saying that because you keep saying the dollar's strong. Why am I saying this is a bullish reset? Well, look at our indicator oscillators from our top right here have gone all the way from extremely elevated levels, hard sell signal, left the bullish control zone, and now we're extremely low, all the way back inside the bearish control zone, almost. We're at like the 20 level, all the way back at the 0 level, all red histograms, and look at what actually happened on the dollar. Nothing. It went nowhere. It just went sideways. So this is a bullish reset to me. You know, you're going to the moon. You can't just go up forever. You need to reset the indicator oscillators because, you know, that's what they do. It's like a heartbeat, you know, or taking a big breath. You breathe in for a little bit. You can only keep breathing in for so long, then you got to breathe out. Then you breathe in for a little bit. You can only keep breathing in for so long, then you got to breathe out. But eventually you run out of air to breathe out, and eventually you breathe in again. So look at what the price action does, you know? And that's why this, to me, looks like a bullish reset. So sure, we probably have some further downside. Maybe we get an aggressive sell-off. You know, how does that correspond with gold or, you know, speculative assets? I mean, anything could happen for sure. But this to me looks like a bullish reset and likely going to be followed by continuation to the upside. We also see on the weekly, we have very clearly reclaimed the 200 exponential and simple. We were in a bear market since July of 2020. We flipped this back over and went back into a bull market, confirmed back in November of 2021. So the dollar is very clearly in a bull market, in the bullish control zone. We're seeing a little weakness, but we have blue slope on the TJD TDMACD. We're above the 200 exponential on simple. The 821 are across the upside. We're at resistance. So we would expect a difficult time getting through all this resistance here, chopping through all this. It's going to take time for sure, but more than likely we go up from here. And then finally, if we look at the monthly, again, because we're on the monthly and these are 200 exponential and simple moving averages, we can only imagine where they would be back here. But we can imagine that they would be coming down like this, and basically flatlining here. But this is very clearly a bear trend the whole time. We probably flipped here slightly for a little bit into a bull market and went parabolic. And then again, bull market on the monthly since 2003. The dollar has been in a bull market on the monthly technically since March of 2003. And then it didn't technically, by my indicator, the way I determine a bull market, it didn't technically flip the 200 simple and exponential back blue at the same time until January of 2020. So it spent 17 years in a bear market, and now it's in a bull market. It is confirmed in a bull market for the first time in 17 years. But everyone hates the dollar and is convinced the dollar is going to zero. But we're in a monthly bull market for the first time in 17 years. Hard buy signal coming out of the bearish control zone, flipping the slope line over blue, all green histograms. The last time we did that was 2008 and continued to the upside since from 2008 to 2017. So this is when it flipped over in 2008. We had a little pushback down, put in some very clear bullish divergence. And then from that 2008 bottom till 2017, we saw a pretty parabolic run to the upside here. So now we're doing the same thing again as we flip everything else over bullish again. So do we, retest these previous highs? Do we see the dollar up here at 120 or 110 or at least 102? I mean, I wouldn't want to bet against it. I'll tell you that much. But that's not against assets. That's against other currencies in the basket. The euro, the pound, the Canadian dollar, a couple other little like shitcoin dollars. But let's be real here. Dollar looks strong. So whatever's about to happen in the world, whatever's about to happen in currencies, but they're printing dollars, 40% of the circulating supply and the Fed and the money and the blah, 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 blah. Who the fuck cares? Because that's not what the chart says. The chart says, who the fuck cares? Not me, because the dollar looks strong. Tesla, so we got the retest perfectly and the gap close at 900 as expected. Breakout, it literally got the exact measure move up to the 1.618 Fibonacci extension to our target, literally to a penny. Elon Musk obviously follows the channel, watches the show because he knew exactly where to sell. Or maybe he has someone else as the world's richest man who does technical analysis and just so happens to do it the same way I do. No, Elon Musk is not paying me, but obviously I'm doing the right kind of technical analysis. If, the richest man alive, a billionaire, is also doing the same technical analysis and selling my exact target at the exact top within a penny. Or maybe it was just a total coincidence. And then also, obviously, total coincidence that, my exact target gets hit and buy again right there. Total coincidence, I'm sure. But let's just be careful because we now have a series of lower highs. We know Elon is selling some more stonkeroonies. So we'll see what happens in like 2 days. So, if Elon's done selling and there's still Tesla culties alive, they didn't all drink the Kool-Aid, this thing probably just goes to $100 billion trillion per share this year. And they're going to deliver 10 million Cybertrucks to everybody that wants one. And Hertz is going to buy 1 million of them. And Tesla is definitely a technology company, not just a car company, and it's worth more than all the other car companies combined, even though they make 50 times as many cars every year and have been around exponentially longer. Or maybe it's overvalued a little bit. Maybe. But I mean, who knows? Uber, so obviously took profits on that trade. Nice little 25% move to the upside. Rolling over, bullish control zone, still a bunch of green histograms. Could consolidate here and move back to the upside. We obviously put in a series of lower lows though. We got a high, we got a low, we got a lower high, we got a lower low, we got a lower high, we got a lower low, and now we got another lower high. So more likely than not, what happens next? Say it with me now. Another lower low. That's right. Correct. I don't know if you really said it, but I just imagine you did. So very clearly operating inside this channel, obviously at resistance, top of the channel, previous, lower high, 200 exponential and simple, very clearly in a bear market. So Uber looks like trash, and you know, it's trash day, so to speak. Discovery, I still like this one, but just for a quick scalp, reversion of the mean. You could argue it already happened right here, and it's not going to happen. It's accelerating to the downside, trying to base out here. Quick little 20% pop to the upside, 6% stop loss, target of $28.54, stop loss at $22.20. Entry right now. I mean, we're going to find out soon, but I like my odds. 3.3 to 1 risk reward ratio. But the truth is, full disclosure, I'm not really entering positions right now. I did take a position on Hexo as discussed, but you know, I'm just slowly accumulating some of these pot stocks that have just gotten absolutely hammered. I fully expect continuation to the downside, but I think 2022 is going to be the year of the marijuana stocks. Maybe 2023, but I know they're in deep value territory. I know that for a fact. Doesn't mean they can't go much, much deeper. Okay? God knows that's true. That's what she said. Viacom. I mean, clearly in a bear market, just getting absolutely hammered. This is another one where we just got to see what happens with this. I mean, I'm not ready to jump right into it, but I mean, it's down big, 66% off the highs. At some clear support levels, previous high right here, consolidation through that range. I mean, this thing is just hammered. We're talking about, we're back at 2011 levels. God. I mean, this thing sucks. At least it didn't pull an XRP and it actually put in a new high, or else it would really look bad. But yeah, Viacom, my bad. I shouldn't like be full on disrespectful of Viacom since someone did ask me to look at it, but let's be real, man. It looks terrible. I mean, this is our weekly chart. We're in a weekly bear market since, you know, technically what, back here, 2018. Even this giant drive to a new high, you know, we averted a bear market for like for like 4 weeks and then went right back into a bear market. I mean, this just looks like a giant short squeeze, and it looks like we're going to get continuation. Not quite old enough to get the 200 exponential and simple on the monthly, but, I mean, this thing looks terrible. It looks like a Chinese stock. Nothing against your Chinese stocks, but let's be real. Let's be real. China looks like shit. Pinterest, I mean, still looks bad, man. Pinterest and Snap both just looking rough. It's trying to base out here, trying to put in a little divergence at the bottom value area. I mean, we had some beautiful scalps on this thing, called some beautiful tops. But let's be real here. I'm not trying to just get my hair cut on this thing again without it looking like it's clearly putting in some basing patterns. It's trying now. There's definitely some potential. But again, you know, the 8 and 21 crossed the downside a while ago. We're at key support. We have some key support through these areas. You know, bears are clearly still very much in control. 2 green histograms on the weekly. Okay, all right. Maybe it is worth taking one more stab at this. I mean, I'm not trying to catch a knife, but if there's one area that I was just going to buy this at and try to catch a knife, it would be right around like $34. So, is it worth taking another stab at? Yeah. Are we going to get stopped out? Probably. Snapchat. Again, just hanging out at that entry point, you know, triple bearish or bullish divergence. I'm sorry. 1 drive, 2 drive, 3 drives lower, 1 drive, 2 drives, 3 drives higher, 1 drive, 2 drive, 3 drives higher. Exited the bullish control zone, about to get the cross up here. Reversion to the mean play, just a scalp, 25% back to 200 exponential and simple. Very clearly in a bear market, but with a 7% stop loss at 43.55. And a modest target of 25% to the upside at 58.49, and an entry of right smack where we're at right now. That gives us a risk reward ratio of 3.67 to 1. So we flip a coin. If we're wrong, Snapchat gives it to us and we have to pay it $1. If we're right, we give it to Snapchat and Snapchat has to pay us, $3.67. So sure, Snapchat, I'll bet you that. I'll take that bet. Still could lose, but we could lose it 4 times in a row as long as we win it once out of every 5. Peloton still looks like trash. Still having a rough life. At key support right now, looks like it's breaking down. Almost hit the measured move, which when I put this measured move into play, it seemed like I was just being a dick. And now here we are at the measured move of the breakdown. I mean, if ever there was one piece of shit company that I could say, I told you so, Peloton is a piece of shit company and I told you so, this is the one, guys. Massive gap back to $81. Does it ever fill it? Eventually, probably, unless it just goes out of business. But again, deep value areas, I don't know if there's any value in Peloton, but there's some support on the technicals. It's trying to base out here. Does it work? I mean, it's a bear market piece of crap. It's like the Nordic track. And who let's look at Nordic track stock and see how it's doing. You know, that was like the fucking fad in 2000. Everybody was like, Nordic track, man, we're going to like cross country ski in our living room. Like, these things are amazing. It's definitely worth the like $1,500, which is the equivalent of like $30,000 now. Like, for sure, people are going to be cross country skiing in their living rooms forever. This is not just like a fitness fad. For sure. 100%. Nordic track out of business. Airbnb. There's a little hope on this one. It's trying to consolidate here at 200 exponential and simple. It's fighting the bear market. It's above at least the 200 simple, even though technically they're both red right now. It's make or break zone. So we'll see what it does here, but it doesn't look great, but looks much better than most of these stocks do. Zillow. Holding for now at support. You know, pretty decent support in this area. Really missed this one here. I was really trying to get this at $50. Got greedy over that $2 holla, but hey, it happens. Building up a little bit of momentum. Looks like it wants to cross 821 to the upside. Is it time to take this trade? 37% move to the upside, 6% stop. You know, I've almost taken this trade like multiple times and still haven't taken it yet. Do we pull the trigger before this thing bursts 37%? Yeah, I think we do. Oh, man. I'm really not trying to take any new trades before the new year. So, but I'm sure probably everybody who tax loss harvested the Zillow is probably thinking the same thing. And there's about to be a giant green Zillow straight up the butt of the shorters. Reversion of the mean play. Gap fill. 37% to the upside with a target of 87.22. 6.4% tight stop loss at 58.29 for a 5.7 to 1 risk reward ratio. We could take this trade 6 times in a row, and if we're right once, we still win. So, is it time to invest in Zillows? I would say probably. Oh man, do I just wait till the new year? I mean, I'm sure there's somebody out there that's thinking the same thing as we are. So do we front run them and take the shot? Yeah, I think we do. I've been putting it off forever. We missed our $2 holla, so might as well. Maybe an options play. Shit. Wish. Man, looking rough here. I did take a little scalp on Wish. It's not looking good for the old stonkaroonie. I mean, this thing probably just keeps going to zero. It looks terrible. I normally don't catch knives, but we're at the 3.618 Fibonacci extension. So, does it go straight to zero? I mean, it's on the way in a hurry. So, I don't know. It's at $3 now, so we'll try it again at $1.50 if we get stopped out of this one. I mean, but the goal is to get like, a little 50% move to the upside for a 10% stop loss. So we take that trade 5 or 6 times in a row. If we're right once, we're still winning, baby. Bumble, buzz, motherfucker, called this one perfectly. Took advantage of Bumble on the way up. Skirped the dump on the way down. Specifically called out this dumperoonie ahead of time. If you didn't see my buzz motherfuckers video and you need some proof, feel free to go back and look. This was a key area we're looking for, this little ascending support line. It's trying to base out here, trying to put in some kind of like support. If this holds, I mean, I didn't take this trade. I'm not taking this trade. 35% move to the upside, 10%, well, 9.3% stop loss. You get stopped out at 31. You get a target of 46.75. I mean, you could technically get a better entry than where we're at right now. I mean, realistically, you could. I mean, this trade setup, if it looked good before, it looks even better now. I mean, you can make a tighter stop loss with an even better target to the upside. I mean, if this thing just keeps going down, the trade setup just gets better and better. Eventually, I might take it. 8% stop loss at below $30, 29.97, let's say, because we don't want an even number. Risk reward ratio 5.68 to 1, 45% upside gap fill. I mean, that's what Bumble's all about, right? Meeting random females and filling gaps. I mean, I've never used it, but it's a dating app, right? So if ever you were going to fill a gap, I think Bumble would be the gap to fill, right? So yeah, gap fill on Bumble. Sounds promising. Sounds promising. And no, that was not a metaphor. I'm talking about filling actual gaps, not in between the ladies' legs. Come on, guys. Don't be crude here. We're professionals, and we're not mean. We treat everyone with respect. Baba, I mean, look, you guys know how I feel about China. You remember me saying back here, get the fuck out. This is not financial advice, but China looks like shit, and it's going to roll over and die. I guess I was right. I mean, this thing was at 319, down 65%. It's not bad. It's not like it's like a real company where you can buy stuff. I mean, this looks terrible. We're at key support. We're at the 618 Fibonacci from the low back in 2015 to the high. I mean, we're back at 2014 prices. This thing is just, it's crazy. You know, I talk about value investing and, you know, the pot stocks and stuff like that. There's just too many headwinds on China, which is why I'm just not really interested in just diving in on these, with the exception of, like, you know, obviously we have a scalp on EDU. Well, it should have been a scalp. Now it's like an investment. It's been so long. But, I mean, I like Baba. I like Baidu. I like potentially Tencent. I like, you know, China in general, but not the markets right now. I mean, they look terrible. 618, previous cycle tops. I mean, this should be support right here, but it just looks so bad. And who knows what's going to happen next. I mean, if you look at the earnings back in 2014 and you look at the earnings now, you look at the sales back in 2014, you look at the sales now. I mean, this thing, it technically should be a great value, but that does not mean it doesn't get cut in half again. I mean, this is the monthly chart. We broke down from a freaking 6-year ascending support line. The 821 across the downside, and it's just big, thick red candles. Remember when they were like, that was the bottom right here? And I was like, bet the next candle isn't a gigantic red candle that takes us much lower. Well, looks like I won the bet. I mean, this looks so bad. Bears are in control for months. All red histograms. Everything just looks terrible on this. The only hope is this tiny little candle right here for support, or this tiny little candle right here for support. So, do I want to buy this now? Do I want to catch the knife? Do I want to buy the absolute bottom? Or it just keeps dumping? No, thank you. Baidu pretty much looks the same. Broke down from the 618. Same thing. I mean, these Chinese stocks all pretty much look the same. Tencent Music, TME, breaking down from key support. All-time lows, going straight to zero. You know, the actual 10-cent chart looks slightly better than that. BZ, Kanzun, again, massive short squeeze and just dumping big thick red candles. Terrible. JD.com, again, another one that I like. You know, long term has potential, but just does not look good right now. I mean, if we lose this level of support that we're at right now at like 65, I fully expect this thing to go straight to like 48. So, I mean, it's either now or never. You know, that's pretty much our support if this support breaks. And, I mean, it doesn't look great right now. So, we'll see. I mean, we could put some fibs in play. We could do all that kind of stuff. We can get fancy. But, I mean, the truth is, you know, if there was ever perfectly called out price action in advance, I mean, this was it. What did I say? Green arrow to the upside, red arrow to the downside, capitulation dump. And that's exactly what happened. So there's our arrows. There's our pattern. There's our dump. There was a possibility, obviously, of a breakout to the upside, but you guys know I have not been bullish on China, with the exception of Chinese food and the occasional China woman, for some time now. And as far as the CCP is concerned, please don't come to my home and murder me. I don't want to get punctuated or whatever. Neo, I mean, probably the best of the Chinese stocks, but again, lower highs and lower lows forever. Does it get another pushback up here? Maybe back to like $35. I mean, it's at 28 now, and it's probably going much lower. When this thing breaks down, it's probably going much lower. You guys know my target on Neo has been like 14 and like $9 forever. So do we get there? Yeah, probably eventually. Could take a while though. But they make EVs. They're the next Tesla. They're the blah, 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 blah. Sensing a pattern here? Blah, blah, blah. EDU. This thing's looking like trash more and more by the day. Almost cut and ran on this again. And stuck to the guns. We got the trade set up and play. We'll see what happens. 162% to the upside for the gap fill and potential like long position. 25% stop loss. Probably going to be saying goodbye to the rest of this stop loss here in the near future. Already down, I think, like 12% on this. So, but it is what it is. Can't win them all. But again, it's a little diversification because I've been out of all the other Chinese stocks for so long. And I actually like EDU long run, long term. So it was the best of the worst. TSM, Taiwan Semiconductor. I mean, just terrible. Range bound forever. The worst of the semiconductors. Save the bull market. Technically above 200 exponential and simple, but range bound. As long as it's between 125.73 and our support at 107.80. I have no interest in this. Again, another nice little 15% scalp trade played out. I have no interest in that. I'm not buying the gimpy racehorses. I'm AMD and Nvidia, and even they look weak now. This was our lower high and starting to sell back off. Does not look good for AMD. Also, the valuations on these are just ridiculous. Nvidia, you guys know I've been like hardcore A and B since. I've been screaming at the top of my lungs AMD since 120, 130, 200, and we ran all the way up to 340. So not interested now, I'll tell you that much. We break down from the support at 291. It's going much, much lower. If it holds, it's probably going much, much higher, but I don't like that. I don't like my odds on this one. Semiconductor weakness in the space tells me that we're looking at potential topping areas. We see these same things tell us that the top's in. Yield curve inversion, semiconductors topping, transportation topping, energy, like going parabolic. Those are like the four most reliable signals for the end of a parabolic bull run / beginning of a recession / depression. And we're potentially seeing all four of those things happening again. That's weird. I wonder what that means. Lots of divergence on longer time frames on things like crypto and Dow Jones and S&P and all these other things. That's weird. I wonder what that means. I wonder if we're topping out. Probably not though. Probably just go straight to $1 trillion. Intel, triple bearish divergence on the monthly. Literally has not put in a new all-time high since 2000. This is like the micro strategy of semiconductors, but like without being like jail worthy. But did not put a new all-time high in 20-something years. In the most bullish semiconductor bull run ever. Well, arguably the second most bullish. If this thing didn't put in a new all-time high now, it's going to be a while. You guys know my target to the downside. Way, way lower. And all the boomers talking about Intel is value and this is a value play. And sure, okay. I'll talk to me in 2 years when they build a foundry and have something legit going on. Until then, the chart tells me that Intel is still a piece of shit. And it has been for 20-something years. And it'll probably continue to be for at least another 2. So 2023, maybe we'll pay some attention to it. But right now, looking like trash. SMH, Vanex Semiconductor ETF, all-time highs, absolutely crushing it, dominating, destroying. the greatest. But, you know, potentially topping out here. Got to be careful. ARKK, I've been literally singing songs about Cathie Wood and how much of a bum loser, piece of shit investor she was since back here. And I guess I was right. And everybody else is saying the same thing now. And people are like, oh, man, I mean, I thought maybe people would be right about Cathie Wood sucking, but I didn't realize it would happen that quick. Well, somebody did. So, sorry, Cathie. Sorry, Cathie, but you literally suck. But she's laughing all the way to the bank because she's got her percentages on the billions of inflows that she has literally lost countless dollars on. This thing has literally gone down to sideways for over a year now. What a trash bag investment. And people are like, yeah, but it's up 500%. But sure, okay. Show me your entry. Show me your trade where you bought back here because you didn't. You bought up here and you're negative. And you're just swinging from her lady nuts. ARKF, also trash. August 2020. Excellent. August 2020 prices. Wow. Wonderful job, Cathie. So anybody that invested in this for any time since August of 2020, a loser. Financially, you're financially losing. You're not a loser of a human being. You just make bad decisions when it comes to investing. Skillshare. Oh my God, this thing looks terrible. New all-time lows, the lowest low that's ever lowered. I mean, is it going to bottom out here? I don't know. This thing just looks so trashy. Had a nice little bounce, 43% scalp to the upside. Underperformed this potential bottoming pattern. I mean, does it just go the rest of the way to zero? This thing was at $47, and now it's at $7. What in God's name? What is this? Down 85%. I mean, BitConnect probably performed better than Skillshare did this year. That was a joke. I think BitConnect's gone. But seriously, though. I mean, is this the worst stock ever? The worst performing stock in existence? Cathie's like, I'm doubling down. It's already got cut in half 9 times, so that's got to be the bottom. Teladoc, it's at our potential entry area at support. Looks pretty thick and juicy. Again, though, are you catching the knife right here? It looks like it's trying to bottom out, but again, it's rolling back over. So it's trying to carve out a bottom and still looks like trash. 28% upside, 112 target, 9% stop loss with a, $80. You get stopped out at like 79 or something like that. Entry point, like basically 87.35. Risk reward ratio, like what, 5-1? Or I'm sorry, 3-1? No way. No, thank you. This thing is trash too. God, these are so bad. Palantir, but they have the technology and bought the gold and they know something we don't know. Yeah, sure. Looks like trash. I mean, it's at support. If it breaks down from this level right now, we have a fib at 1657, and then we have like 5 days of price action. I mean, there's 5 days worth of buyers holding up the price right now. If it breaks down from here, the 9 people bought Palantir on the way up right here. So if those 9 people decide to sell, Palantir is going straight to $10. So I'll see you at $10, Palantir, from 44. Another trash bag stock. But the government programs and the technology, you just don't understand. Unity Software. Oh, man. I mean, trying to build some momentum here. Hard buy. Bunch of green histograms. I mean, this scalp still looks okay here, but I wouldn't be surprised. It's only 2-to-1 risk-reward ratio. I mean, it's still above the 200 exponential and simple, so arguably it's like one of the best tech stocks. But there's actual good stocks here. We're almost to them, so the 4 good stocks in the tech sector. Corsair still looks like trash. Again, I have purchased actual computer components and used them. So once again, invest in the actual product, but not in the stock, because damn. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Giant double top, Adam and Eve top on PayPal, playing out beautifully. Is it trying to carve out a bottom here? Yes. Building up momentum. Hard buy signal. 20% move to the upside. 5% stop loss. So stopped out at 178. Target 225. Entry basically right where we're at, 187. Risk reward on this is like 4-1. So actual company, we'll see what happens. I mean, it's tough to, but it's down, so it's got to be a good value now. Maybe it just goes down more. Square looks like trash. Broke down from a key range, much worse. Trying to build up some kind of support here. I mean, this thing, let's be real. Plus Jack Dorsey, $100. Should be able to grab this for $100. So I don't miss out by $1. Maybe I'll buy it at $102. Just I'll front run Square slightly. I'll get it at that 102. Yeah, going to $100. So goodbye, 30% more. Twitter, total trash product, total trash chart, garbage to ever garbage. I mean, this thing is like the Kathy Wood of social media platforms. Hasn't made a profit since 2013. Anyone that ever bought this stock from 2013 is either dead, break even, or down. Maybe they're up if they bought it like during the capitulation dump right here, but chances are you probably didn't because Twitter's garbage. So I don't know. I mean, you would think they'd figure out a way to make money in the stock to go up, but apparently not. eBay holding support for now. Hard buy signal. Leaving the bearish control zone. Bunch of green histograms. This probably does try to pop back up here. 200 exponential and simple back above its head. If it gets back above $68, it's going to look pretty good. I mean, this thing has stayed strong for a while. End of the year. I mean, they probably had like dished out gift cards left and right. So eBay probably does pop off here. It probably does go up and retest the all-time highs. So, I mean, what does that even give us? Does eBay just pop off 20%? I mean, it's a little speculative, but we take out the low, we get stopped out. We take out the high, we get super thick and juicy. 22% upside, 5.7% downside, 3.8 to 1 risk reward ratio. Stop at 61.89 if we break down. Target minimum all-time highs, 81.12. If we get there, we probably just rip to the upside. Entry, right smack where we're at right now. It looks pretty juicy. Full-on disclosure, though. I do own some eBay stock, but, mine's paid for. Mine's bought and paid for through my gains. But probably will take that trade. That's a decent little trade. And eBay actually does look strong here. And typically, I think they pop off pretty solid, like the beginning of the year, as people using those gift cards and whatnot. Amazon consolidating at 200 exponential and simple, still range bound forever. It's been in this range, in this channel since July of 2020. Had two little fake failed breakouts. Slowly just grinding up here, though, so maybe this is an ascending triangle, and it's getting ready to just rip. I really would like to just add to my Amazon or take a position or a scalp or whatever at like 28.75. Do I get it, though? Am I going to get it? God, I hope I get it. I hope I get it. I mean, hopefully. I don't want to hold my breath on this one, but hopefully we get it. Hopefully we get that breakdown. Could have took the scalp off the heart line, but we did get greedy on that one. I mean, it was pathetic. It was like 8% move. I just make a bunch of money on something else and then just use that to buy Amazon when it's still going sideways in like 3 years. So, Apple, the juiciest chart ever, with the exception of the next juiciest chart ever we're about to look at. I mean, just absolutely crushing, absolutely dominating. Looks great, strong. Does it top out here? I mean, look, do you want to be the guy who tries to call it a top on Apple? I mean, I don't see any signs that this is the top, but I mean, it's been running for sure, but Apple is literally holding up the markets. Meta, again, could not clear that resistance. This looks like a double bottom W. If this thing rips, it probably does just explode to the upside. Measure move from the bottom of the move to the top of the move, new all-time highs. I mean, this thing wants to rip. You guys know I refuse to buy Facebook because it's a trash bag company with trash bag values. And you know what? I don't have a lot of like hard stops on like my morals, my morality, my investments. But you know what? I draw the line at Facebook being a piece of shit. Also not a fan of lizard people named Mark Zuckerberg. Google. Googly eyes, Alphabet. Obviously love YouTube and Google. They're great. If you're listening, Google, I love you. And you're great. Chart-wise, pretty good. I mean, not quite as good as Apple or Microsoft, but pretty good. Still strong. Microsoft, just so thick and juicy. Just forever crushing, dominating, destroying. All-time highs. The best, the greatest. Apple and Microsoft. I mean, if you literally don't own Apple, Microsoft, and Nvidia, like, what the fuck have you been doing? Like, what are you buying? What stocks are you investing in? Do I think you should buy them now? No, I don't think so. But this is not financial advice, so. But I mean, if you don't own them, what the fuck? DocuSign, trash, gigantic gap to the downside, as expected, as planned. Bear market, total trash bag, total garbage. Does it fill the gap or does it just go much, much lower? I'd say it's 50-50. It either goes to $100 or $229. But it's definitely trash for sure. So either way, whether you're right or wrong, I would get the fuck out as soon as possible afterwards or before. Oh, this was that random one somebody had me look at last time. EEIQ. I wonder how that dude's random bullshit trade worked out. I can't even remember what it was. It was like ticker symbol coupon or something. Its market cap is $1 million and it's a total trash bag penny stock and it's about to get listed. If you're listening, I'm just fucking with you, but seriously though. But seriously, how did it work out? Did it jump up? Did it go from $1 million market cap to $10 million market cap? Did you get the 10x you were looking for? Did you? Did you? Huh? Did you? Huh? But that's it. We're done. We're donezo. Donorama. Crocodile Dundee. Gold hanging out 200 exponential and simple, doing nothing still. Silver hanging out at support, doing nothing still. Still very much in a bear market. Overall, not good. But just waiting. There's so many headwinds for metals. They're like, oh, it's an inflation head. No, it's like, is there going to be that much inflation? Oh, it's this, it's that, it's the other. DXY, headwind on gold. TNX, headwind on gold. Inflation, not that scary. Headwind on gold. We'll see. But yeah, that's it. Let me just jump and say what's up to my bots real quick. What's up, Sabrina? My bodiest bot to ever bot. It's good to bot you. Go bot yourself. I mean, don't you know not to make bots named after girls because we know you're a bot? Even if you didn't post body stuff, the fact that you have a girl's name, we know you're a bot. No one's going to click on your body bots. Hey, what's up, Russian bot? You must be colluding with Trump. You're a colluder. Icebox says, new to the channel and just had a quick question. Do you trade ranges or do you only trade trends? No, I trade ranges all the time, man. Like if I'm range bound on something, like for instance, let's say I buy support and sell resistance over and over and over again. The probability of success if you trade with the trend is over 50%, because if something's been going up, it's more likely going to continue going up. So I prefer to trade trends as the probability of success for an investment or trend is much higher. But if I'm range bound on something, like for instance, Taiwan Semiconductor or Amazon or something like that, 100% will buy support and sell resistance. Or like, I mean, what's another example? Something else that's just been going sideways forever. I mean, the Russell, there's like so many things I feel like. gosh. What is this? You're a bot too, aren't you? I mean, you look like a bot. I don't know for sure if you're a bot, but I'm just going to assume that you're a bot. If you're not a bot, you can make another account and come back and say less botty things. But I'm just going to assume that you have a female name and you're typing random things that you're a bot. So, sorry, bot. Spreaking bot? Yes, wisdom. Fuck yeah, bro. 100%. Yeah, spreaking bot? I gotta love these fucking bots, man. Bots are 50% of the people who watch these videos. So sometimes you guys don't show up. It's just me and the bots hanging out, and we just beep bop the whole time. I don't even do technical analysis. We just beep at each other. I do actually like robots though, but not bots. Like I have a robot vacuum cleaner. I've talked about it before. Thought about the robot lawnmower, but I don't know, man. It seems a little sketch. There's some little kids in the neighborhood. I find their toys in my yard sometimes. Don't want to find most of a kid in the yard and a malfunctioning lawnmower with a giant pool of ketchup, if you know what I'm saying. Not how I want to spend an afternoon. Hiding bodies. Well, remainder of bodies. I like to think if the robot lawnmower does its job, that it would really just be like kind of spraying it down with the hose afterwards. Crypto Galt says, hey all. Well, fancy that. Crypto Trend Trader was right. I love it, dude. I'm not always right, but when I am, it's live on stream and documented for the world to see. And most of the time I am. So definitely feels good. But yeah, that's it for tonight, guys. Hopefully everybody enjoyed themselves and didn't click on any bot links. Hopefully you got some value out of the stream. If you did, make sure you like and subscribe. For those of you that support the channel and me, myself, and I and the work that I do, I much appreciate you guys. As always, thank you very much. Tell your friends, tell your family, tell your wife, make your cat watch a stream with you. Or if you're a man, a real man anyway, make your dog watch it with you. Because everybody knows dogs are better than cats. Westworld 2, The Motors Strike Back. There was like that crazy Mark Wahlberg movie where like the plants like come back and like kill all the people. They're like you people are mean and global warming and stop hurting us. And they like put out like some weird gases and then all the people like kill themselves and stuff. That's like what I picture. They like the guy like turns on the lawnmower and then goes and lays down in front of it. But like with little kids and a robot vacuum cleaner. So maybe a little more gruesome. But equally entertaining. Depending on what kind of like entertainment you like. For a horror movie, not for real life. Alright guys, that's it though. Everybody have a good one. That is our Wednesday evening midweek market update. It is 10:56 p.m. Eastern Standard Time on December 29th, 2021. And ladies and gentlemen, seeing as to how, and bots as well, I'm sorry, I don't want to discriminate. Today is the 29th. We only have 2 more days left in this year. That gives us 1 day on Thursday and 1 on Friday. So I will see you next year, as cliche as that is. So have a happy new year. Don't drink and drive. Have a little fun. Pop those bottles. Last chance for that tax loss harvesting. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. I hope that each and every one of you had a great 2021, as good a year as you could have. I know that there were obviously some headwinds for life, but there were some tailwinds for markets. So if you're new to the channel, if you just found me this year, stick around because 2022 is going to be fucking epic. Maybe it won't be as easy, but I bet you it's going to be just as fun, if not more fun. And we're going to make those profits. We're going to make those gains. We're going to bend the market over, and we're going to take what belongs to us and so much more. So with that being said, asotos, asotos. Whoa, good night, my friend. I don't know why. I feel like that should just have like a Japanese accent to it. So, whoa, asotos. Good night, my friend. But yeah, that's it for tonight. Everybody have a good one. I'll see you guys in the group. And everybody stay safe. Do not drink and drive. Thank your lucky stars, your God above, or, you know, whatever. Pray to your plants, whatever it is, you know, that you worship or care about. That, you know, you have a happy, healthy family. That you have, you know, the ability to trade these markets, make that money, educate yourself. Know that you guys are here putting in the hard work, and it's a fact. You guys are putting in the work, you're laying the groundwork, you're educating yourself. This education will reap exponential rewards in the future. As we trade, scalp, invest, whatever you want to call it. Even if Bitcoin goes into a prolonged bear market, we know there's going to be another bull market eventually. Even if, markets do top out, all that's going to do is just present more opportunities. No matter what happens, there's going to be opportunities for us, and we are going to absolutely fucking dominate those opportunities. So if it's the year of the pot stocks, if it's the year of the crypto, if it's the year of tech, if it's the year of fucking beanie babies and tulips, I don't give a damn what it is. We are going to spank that money. We're going to shake it down. We're going to spin it around, and we're going to get that dollar bill, yo. But with that, I'm out of here. Crypto Trend Trader, Happy New Year. Peace, I'm out.